Welcome to the Shakti 2026 annual meeting, the Imagination Era. Thank you on behalf of our Shakti team. Thank you all for being here today, our LPs, founders, friends, community. It's really everything that is core to Shakti. And so glad to see many of you last night at our welcome reception. And a special thank you to Igor, our amazing Titan, who shared his incredible wine with us last night from Sill Family Vineyards. And if I'm being honest, it might be the reason several people come back year after year is just for your wine, but that's okay, we'll take it. Just a couple of thank yous and logistics. Thank you to our extended team, CJ, Otis, Nancy, thank you for making today possible, as well as to Cooley for your sponsorship and your support. Jim Fulton, thank you so much for being the best lawyer and coming all the way out here. And just a couple of other logistics. We have a packed day, but there's plenty of coffee, snacks in the back. Bathrooms are down the hall. And if this event is off the record, and so if you want to quote anyone, just please ask for their permission in advance. And in keeping with our tradition of featuring entrepreneurship in all forms, we're excited to have an incredible olive oil and vinegar local artisan over here, and for Nueva. And so in the break at lunch, please go test some olive oils, take some home. They also do shipping if you are traveling. I know a lot of people came from really far and wide today, so thank you. We have a really great day planned today. We are going to hear all about AI, from Wall Street to Main Street, everything in between, here on Earth, up in space. It's gonna be a really great conversation. And so, one thing we think a lot about is what is the world gonna look like a decade from now? Things are quite literally changing every single day. And what we realized is that the answer to that is largely in this room with you all. And so we asked all of you what you thought the next decade is going to look like. And so excited to hear what you had to say about it. And with that, let's roll the tape.
AI is going to be omnipresent. There's going to be this invisible layer of intelligence all around us.
We're truly going to have a personal assistant for basically everything. Work, life. We'll be logging into way less software because our AI is going to be logging in for us.
It'll know what's in our fridge. It'll know about our weekly planning cycles. It'll help us make decisions about everything that we're doing that does influence how we cook and how we eat.
In 10 years, I envision a world with no traffic. We're applying AI to help cities move efficiently.
Cars are going from being mechanically complex to becoming digitally complex. And as this transformation happens, the repair infrastructure needed to service these vehicles is going to completely change.
Fast forward 10 years, I do expect to have hundreds of thousands of trucks across supply chains that just work. But freight is only one sector. The impact of physical AI on the broader economy is somewhat impossible to fathom.
AI won't just take us forward, it can bring back what we lost. A world with cleaner skies, oceans without any pollution.
A world I'm betting on is that AI actually helps government work for people and not one where AI is a shiny layer on top of a broken infrastructure.
You can imagine the same way that AI is getting so good at interfacing with the digital. If you feed a text or an image, imagine that, but for the physical world, to be able to touch and think and perceive the same way a human does.
AI will finally deliver on the 3 to 4 day work week that we've all been looking forward to.
That every single person is learning and acquiring new skills every day. I think that we will see the rise of an ongoing skills resume.
AI will bring closer imagination and outcome. Those with the ability to express their imagination will be the masters of the new AI age.
Humanity as a whole will have a chance to really raise the bar on how we express ourselves.
Today, I think there's a lot of fear and anxiety for the entry-level workers. It wasn't true 30 years ago that the disappearance of the mundane meant there was no entry point. It just meant they hopped on a little higher up the ladder.
I expect that there will be a range of applications that are economically worthwhile, and that they will have survived the collapse of the overall hype in LLMs and the notion of artificial general intelligence.
Coruscant is a planet from Star Wars, one city covering an entire world, brilliant at the top. People down at the bottom, they never see the sky. That system is not broken. It works exactly as designed. That is the risk with AI. AI can do remarkable things. I think that issue is settled. The question looking forward is, who gets the gains? Who gets agency? Who gets to see the sky? What you founders decide right now, how you build, and who you serve determines the answer. What would Luke say? More people should see the sky. Darth Vader would say, gains to the top. Workers get watched. Workers get locked out. Yoda would say, tools do not choose. Builders do. Now go build.
Thank you, Liz. Good morning and welcome. You just heard from some of our founders and Titans LPs, and Jonathan Rosenberg, for those of you who know him, as always, has the most appropriate way of framing a very complex topic. So thank you, Jonathan. Look, we have a long day, a lot of interesting topics, but I want to start by just saying thank you. It's so great to see all of you in this room. There are relationships here that go back 3 decades. Shakti, at its heart, is community venture capital. Everything we do is through you. You've given us money to invest. You've introduced us to great founders. You've helped those founders scale their companies. And you've been our friend, philosopher, and guide for the last 5 years. So really, we cannot be here without your help. So thank you so much. We have a fantastic community. In this room, we have founders, CEOs, board members of large public companies, obviously startups, people from Silicon Valley, Wall Street, Hollywood. People have come here from Asia Pacific, as far as Australia and India, also from Hawaii, and some people who have just lived 5 minutes away. So all of you are here. There are some people in the room who are grandparents, and there are some people in the room who are still finishing their undergrad in college. So it's a wide diversity. Each of you bring a phenomenal perspective. You're domain experts in your own fields. We look forward to learning from you, and it's going to be a fantastic day. So please don't be shy. Reach out to each other. Reach out to us. We're going to say a lot of things today. Everything we say is a hypothesis. We really are in the venture business, as you know. We are, speaking for myself, often wrong, but never in doubt. So just keep that in mind. If you hear something that you think like, that's crazy, you're probably right. And you can tell me that, so thank you. We're in San Francisco. The sun is shining. The Golden Gate Bridge looks as beautiful as ever. And outside this room, there are thousands of founders who have come from all over the world to start their companies and reimagine our society. Venture capitalists are knocking down their doors, giving them billions of dollars at seemingly crazy valuations. Apartment rentals in San Francisco are at all-time high, again. The average rent for a one-bedroom is $3,400. The average rent across all apartment units is $4,000, higher than Manhattan. And it seems like we're back in the 90s again, right? A lot of people in the room say, yeah, this seems familiar. Except that now the cars drive themselves, and there are at least almost 10 companies worth over $1 trillion. So we're living in interesting times again. We could have chosen a framing for this meeting as Back to the Future, but we chose the imagination era. And so you might be wondering why we chose that and why now. The credit for that phrase, the imagination era, goes to one of our founders we know well. She coined this phrase at the beginning of this year to describe this coming decade where AI will do all the specialization and humans, we will all left to do imagination, which is a very powerful but a rare skill, and we're all going to have to learn how to do that. I was lucky to see this founder again 2 weeks ago when she was standing in front of thousands of people at an NFL stadium in Los Angeles. And she was describing the new era for her company, which is an AI platform that's reimagining productivity and design. And the stadium was full of people. There were investors from all over the world. There were Wall Street analysts. There were thousands of users of this product. This company now serves over 250 million users a month, is doing more than $4 billion in annualized recurring revenue, has been profitable for 9 years, and is valued over $42 billion. Her company is the #1 undisputed leader in that category. But what struck me about that event 2 weeks ago is that the way she described her company and her product and her vision for the world was exactly the same as she had described it 14 years ago when we first met her right here in San Francisco at Delancey Street Cafe, when she and her co-founder had flown in from Sydney, Australia. And she described her vision for what she wanted the world to be like and how she was going to reimagine design as a use case. When we met her 14 years ago, that room was empty, and almost nobody believed her. But it wasn't the first time that we had a discussion like that with a founder. Just a year later, in 2013, we met with another founder right across the bridge here in Sausalito at a small garage, and that founder had a vision to reimagine commerce and make it circular, and specifically at the luxury end of the e-commerce segment. And her vision was that people who bought luxury items should be able to resell it to somebody else who wanted it, and the person buying it again would know that it was an authentic item, it was real. No one believed her either. A few years later, she took that company public. That company now today is the #1 luxury resale company in the world. A few years after that, we met another founder right here in Mountain View in Silicon Valley, heart of Silicon Valley. And he had a vision to reimagine logistics. And specifically, his idea was that while autonomous transportation would be pervasive, the place where it would find the most appeal and have a really strong business model would be in what he called the middle mile segment of transportation. This is a segment where you can move freight from a central warehouse to a retail outlet. As you can imagine, nobody believed him either. Today, his company is the only company in North America that runs commercially approved and regulatory approved self-driving trucks. No safety driver, actual trucks running around, doing business for companies like Walmart and Pepsi. So what's common across these founders, and many other stories we can tell you, is that these founders on day one, when we met them, were all focusing on a use case that was ubiquitous and frequent, what we call a toothbrush. And they wanted to reimagine that with new technology. None of these companies were AI companies on day one. They're all AI companies today. These founders were able to navigate all the technological innovations that came along on a daily basis and still keep their eyes fixed on their North Star use case, and were able to make their companies into category leaders. What's also true and common is that these founders were not believed. Most people did not believe in their vision, but they kept persisting. Why am I telling you these stories? Well, because obviously we're selfish. We like to talk about our book. Not only did we meet these founders on day one, we were lucky to get to invest in them on day one. And not only did we invest, but we stayed engaged with them, in many cases over a decade. And we kept investing in their success. All of you have invested in their success, and you know these founders. Julie Wainwright at The RealReal, Melanie and Cliff at Canva, and Gautam at Gothic. As we invested in their success and they became successful, they returned the favor. They invested in our success. Many of these founders are now LPs in our funds. They have referred us to other great founders, and we have invested in those founders and in their success. And then they refer us to other founders. That is the Shakti flywheel. Our success depends on our founders' success. We take that very seriously. We're in the customer service business. That flywheel takes a long time to get started. Canva is still private 14 years after I met Melanie. But once it gets started, it's our moat. It's our strongest defensive moat, because great founders refer us to other great founders. That's how we win deals early. That's how we're able to get in a very competitive space and able to do what we do best, which is invest at inception in founders who are reimagining toothbrushes with new technology, and then just do everything possible to make them successful. So speaking of reimagination, as we all know, the whole world is getting reimagined. And there's a lot going on, and we all listen to the same podcasts and read the same tweets, so I'm not going to bore you with what you already know. But what we thought we would do is give you a sense of our sort of perspective on what's going on. And we'll do that very quickly in the interest of time, but we'll focus on three things. What's going on recently? How do we make sense of all of this innovation on a daily basis, all the disruption? What we think is likely to happen in the coming years, and then what do we do about it? What's the Shakti plan? So the best way to summarize what we think is going on is Sydney, our Gen Z partner. Sydney, where are you? Sydney's right there. So Sydney and I, earlier in this year, were having a conversation. Sydney's a couple of years out of college. And I said, Sydney, what's going on? And she's like, well, what's going on, Keval, is that about a decade ago, people started getting serious about AI. And Google published this paper called Transformers. Attention is all you need. And then that was kind of out there. But what really happened was about 4 years ago, this thing, ChatGPT, came along. And it made AI accessible to the masses. We all now use it. And then a few years later, coding agents came along and gave AI a business model. Most of the revenue we all hear about today in all these AI companies is really coding agents. And then just recently, DeepSeek and OpenClaw and a lot of these open source technologies came along that made that AI business model more cost effective and allowed startups to do things that were not possible before because the cost of using AI kind of plummeted. So she's like, that's what's happened. A technology that was invented in a lab got sort of mass accessible, business model came along, and then open source made it more cost effective. And as she was describing that, I said, wait a minute, that seems like my first few years out of college. So only 30 years ago. So Sydney and I are living like parallel lives here, Gen Z, Gen X, except the Gen Z version is a lot better, right? Why? Because the Gen X version, the internet, which was pretty amazing, was only in the digital domain, right? It mostly changed online stuff. But AI is both digital and physical, and it's not just on Earth, but it's also in space, and we'll talk about that in a minute. So Sydney's next 20 years are going to be way more amazing than my first 20 years. So you picked the right timing, thanks to your parents. Adam, well done. Adam Landau's here, Sydney's dad. But really, what's going on in the last few years this has happened before, right? We had Netscape that made internet more accessible. Then we had Amazon, which made the internet give a business model, commerce. And then we had Linux and Red Hat, which was the company that made Linux more sort of commercial and accessible, that dropped the price of accessing the internet and starting a business online. Almost identical things are happening right now. So let's look at, that's how we think, that's what we think about what's happened in the last 4 years. But where do we go from here? What comes next? So let's look at that quickly. And the way we think about framing that is we just go back to fundamentals and say, look, when economies are getting transformed, focus on the factors of production. There are three factors, right? Technology, labor, and capital, TLC. So what's happening with each of those things? And we'll just give you a couple of things for each of them. So let's look at technology. And obviously the key technology is AI. So AI has gone from machine learning, Google Translate, to now autonomous agentic AI. People say AI is like electricity. Well, if you think about electricity, the refrigerator is always on. We don't go into the house and turn the refrigerator on. It's always on. Electricity is autonomous, always on. And we'll talk about the cost effectiveness of that in a minute. But essentially, AI has now become ubiquitous and frequent, just like a toothbrush, right? But then this open source thing happened. I think it's something worthwhile double-clicking a little bit, because what this chart shows is in the 90s, anybody remember Sun Microsystems? Right? So all this is a tell on your Gen X. If you raise your hand, you're like me or older. But back in the day, right, when I graduated from computer science grad school, Sun was the de facto computing platform, right? You couldn't do anything without a Sun server, Solaris Unix. My first company, when we started HX in the mid-90s, we had to rent a cage at Exodus data center, buy a bunch of Sun servers, put an Oracle database on top of it. We raised $22 million. 21 of that went to Sun, Oracle, and Exodus. Literally, right? You had to build your entire computing stack with millions of dollars. And then what happened? Then Linux came along. Linux came along, and all of a sudden, the cloud computing era started. Because you could just put Linux on a PC, a server blade, for like $1,000 and rent a cloud and launch your website without a whole lot of capital. And Sun's market cap, which was over $100 billion at one point, vanished in the subsequent years. It eventually got acquired by Oracle. So this was a moment in time where if you had asked any of us back in the 90s, what do you think is the future of Sun Microsystems? Every one of us, I would have said, it's going to be the biggest company on planet Earth. Most of you in Gen Z don't even know what Sun is. It's not that, Sydney. It was a computer. So Linux is a big thing. Well, OpenClaw and DeepSeek are also a big thing. And if the past is the prologue, the next few years might have a very different outcome than what we're assuming right now. The last thing about AI, so again, this ubiquity and frequency aspect of AI. Like if AI is truly going to be like electricity, it has to be affordable, right? Technically, it's there today, right? Agentic AI is autonomous. But is it affordable? If we really leave AI on all the time, how much is it going to cost us? So we did like a back of the envelope analysis. And when we went into it, our assumption was it's going to be another decade or so before AI becomes affordable for all of us, agentic AI. Well, it turns out, because the cost of tokens have fallen precipitously, token costs today are like 600 times lower than they were 3 years ago. And by the way, a lot of that is because of open source, right? You look at some of these open source models, just like 2 days ago, DeepSeek's latest model is 100 the cost of the latest OpenAI model. So as cost of tokens have gone down, ubiquitous, always-on AI is kind of approaching the cost of electricity. This $165 is the average household price of electricity per month in the US today. And autonomous AI is approaching that. By the way, the reason why chat AI, which is the prompted AI that we've all been using so far, is cheaper is because most of the cost in AI models is in the input token, not in the output token, right? And chat has basically the same number of input tokens and output tokens, but agentic AI has a lot many more input tokens, so it's more expensive. Okay, let's talk about space. And why is space important? By the way, what's happened with space is that, 40 years ago was about putting a man on the moon because of national security and geopolitical goal, and we did that. And then we sent out interstellar probes, and now we're, for the first time, entering what we call S-commerce, or this commercialization of space, which is really the time when entrepreneurs and VCs have a role to play, because until then, it's really about large CapEx and big budgets, which mostly governments and large companies can afford. So something interesting is about to happen in space. And again, this has happened before. The Amazon IPO, which happened in 1997, if you look at the business model of the internet, very different pre-Amazon IPO and after that. Before the Amazon IPO, there were 3 e-commerce companies that had gone public. After the Amazon IPO, 300 companies went public. So it was a 100 times explosion in innovation, venture capital, and exits. Well, we think the same is likely to happen as SpaceX goes public in the next couple of months, right? And why is that? Because the cost of launching something in space is, again, plummeted by 100x. We have Chiran here, who's, Chiran's raised his hand. Chiran's here from India. He was a scientist at the Indian Space Research Organization, ISRO. And he's building a company that's, I'll let him tell you in a minute. But that's an example of an entrepreneur that's starting a company that's going to benefit directly from the SpaceX IPO, because the cost of lowering things has gone down. And as we know, with Moore's law, when costs go down, a lot of innovation and venture capital follows. So 2 interesting moments and 2 interesting catalysts: open source in AI and the SpaceX IPO for S-commerce. Let's look at labor. So that was technology. Let's look at labor quickly. And there's a lot of stuff going on in labor. People think there's a white-collar recession. Blue-collar jobs are fine. Software engineering, if you have a kid, we have a 16-year-old at home right now. 2 years ago, he told me he hates coding. He's not going to do STEM. It broke my heart. I was like, you're going to be unemployed and homeless. You're going to fade right into San Francisco. And 2 years later, I think he's a genius because his mom, who's a liberal arts major, is smarter than me. She's like, look, he's on the right path because maybe AI is going to do all the coding. So what's happening with software engineering? Well, maybe it's a mixed picture, right? Because yes, entry-level disruption. Marco is here. Where's Marco Brocker? Marco is going to Cal right now. By the way, Cal, soccer team captain, mechanical engineering, graduating right now. Amazing kid. And Marco and his friends are, I think some of them are still looking for jobs coming out of a great institution with engineering backgrounds. Why is that? Because there's definitely disruption at the entry level. But the overall picture, let me go back. The overall picture for software engineering jobs is actually pretty good. If you look at the next decade, there are a lot of forecasts that say jobs are going to go up in that field. Why is that? Well, because of this. So yes, it is true that AI is doing a lot of the coding. And so if you think about companies, mostly Silicon Valley tech companies that are the producers of AI, yes, they're becoming more efficient because AI is doing all the coding. But the companies outside of Silicon Valley that are using AI, they're actually deploying AI in their non-technical businesses. If you're making a ball bearing, or if you're making paint, or if you're an agricultural company, if you're Walmart, you are using AI to become more productive. And so those people are hiring more engineers than ever before, right? So the net employment in engineering jobs is actually likely to go up. And the kids get it. The kids are really smart. Kids are always smarter than us. What this chart shows is the enrollment at the University of California campuses. There are, 9, Marco, 13 campuses, 9 to 13, something like that, dozen campuses, lots of campuses, public university, largest public system in the world. The blue line is the computer science enrollment. It kind of went up for a while and then slowed going down. But this sort of orange dark line that's going vertical, those are majors in AI and data science. So yes, the kids are not taking computer science as much, but look what they're doing. They know where the jobs of the future are. They're going where the puck is going. Really, really smart kids. Gen Z is going to be totally fine. So that was labor. Let's look at capital. So this is like my favorite chart because that's what I do as a VC now, sadly. I think about money. And this chart, 3 charts, but this captures the last 40 years of venture capital. And this data comes from Professor Jay Ritter at the University of Florida. It's in the public domain. You can look it up. And what this says is we have, over the last 40 years, done something crazy, insane, not in a good way. We meaning VCs. We have backed way more, so we're backing 20 times more startups per year. The number of startups, venture-backed startups, has gone up by 20 times. Chart number 1. The number of IPOs, the bottom of the funnel, so that's the top of the funnel. The bottom of the funnel has basically remained the same. There are roughly 50 IPOs per year, up and down, right? Companies are staying longer private. Companies are staying longer private by almost 2x. It used to be that companies would go public 4 to 6 years after inception. Now it's 8 to 10 years. And they have bigger revenues. But if you look at the number of companies that are profitable when they go out at IPO, it's plummeted from 80% to 20%. So this is really insanity. We're putting more money into the private market. Companies have more time to go build a durable business. And they're coming out with a shittier product, sorry. How is that possible? Well, we made it happen, but it's not going to last. So our view is that ultimately, in the venture capital industry, you can scale capital by moving the line between private and public markets, but you cannot scale the number of companies. There are only so many great companies. And why is that? Because ultimately customers, whether you're a consumer or an enterprise, you don't want to buy the same product or service from 10 people. You want to buy it from at most 2 or 3. So the bottom of the funnel is going to be constrained. All right. In the interest of time, I'll move quickly here. Sorry, Liz. The question that comes up is, okay, that's all great. That's what's likely to happen. Future is uncertain. But where are we in this cycle? We are about to have 3 IPOs over $1 trillion, right? SpaceX, OpenAI, Anthropic. So isn't it all done? Like, why don't we just go home? What this slide shows is there are 8 billion people on the planet, right? The gray dot, each dot is 3 million people, roughly. The green is green is the population that's using AI on a regular basis. So clearly, there's a lot more of this bucket to fill. We're just in the early innings, guys. Okay, so if we're in the early innings, stick with me for a little bit. $1 trillion, we throw this number around a lot now. It's like, billion used to be a thing, now trillion's a thing. And we have a lot of companies with $1 trillion in valuation. But could we imagine a company with $1 trillion in revenue? Think about it for a minute. Because if we didn't imagine this, why would we be in the venture capital business, right? So we think there is a potential to find a company, maybe not just one, but many that would have $1 trillion in revenue. The basic math would be you to find 2 billion people that spend $500 a year. Is that possible? Sounds crazy. Is it possible? Turns out today, people are paying $500 a year for electricity. That's the average yearly annual bill across the world, not just across the world. And there are 7 billion people who are doing that. So could we imagine a company getting 1/3 of that? We can. That's why we're in the venture capital business. We sell hopium, and this is our hopium. Okay, so we talked about the factors of production. We talked about the fact that we're in the early innings of this humongous revolution that lies ahead. We talked about the fact that the 2 key ingredients for explosion in entrepreneurship and venture capital have arrived, which is open source and a business model for this new technology. Just like it happened for the internet, it's going to happen for AI. So early innings, the inflection points have arrived. The next 20 years are going to be amazing for Sydney and for all of us. But the number of IPOs, the number of great category-leading companies is still going to be small. So if you believe all of that, if you take it all together, then I think the only logical conclusion is if you're deploying your capital, you would put it into a fund that's investing at inception stage, it's early, has a small curated portfolio, concentrated bets, and is focused on the 2 biggest markets that are going to be meaningful, AI and space tech. Lucky for you, that's what we do. That's the product we're selling. You bought the product. Hopefully, you'll keep buying it. But in all earnestness, thank you for your support. We couldn't be here without you. You guys have given us so much inspiration, so much material support, and just the enthusiasm that we feel in this room and every year from you is really inspirational to us. So thank you.
I'm going to call up Brian Nowak to the stage. Brian is Managing Director and Head of U.S. Internet Research at Morgan Stanley. And Brian's going to give us the view from the top. What's going on with the public tech giants and how they're investing in AI. And as a fun fact, when Brian was first here, I think 3 years ago, he gave a really great free stock tip to everyone, which was, this was right after the launch of ChatGPT, and Brian said, to buy the chip companies. So if people were listening and they did that, the chip companies have had a historic run. So thank you, Brian, for that advice. And everyone should pay attention to what he says today. Here, over to you. Thanks, Brian.
Thank you. All right, thank you, Liz. Thanks for that nice intro. It's good to see everybody again. So here we are, year 4 of sort of the Gen AI cycle, and I think I was asked to speak about ROIC. What are we seeing in ROIC? Where are we seeing signal that all this investment is actually going to yield real return? And are there any potential kinks in the line to where maybe there's overinvestment? Is this going to be like broadband of years and years ago, as I'm sure a lot of you remember? We've been studying this era. We've been studying this for a long time. I've been at Morgan Stanley 13 years. I've been a sell-side research analyst 20 years. So we've been studying tech cycles for a long time. This is a chart that we've sort of been analyzing the point of every subsequent tech cycle has an exponentially larger impact on the globe. You have everything from the mini computer, the PC, the desktop, the mobile, now to the data era, which is really now called the Gen AI era, soon to be the space era. But the punchline is, as you have more data that can be analyzed, more users, both enterprise and consumer, that are using products and feeding more data into these technologies, the bottom line is that digitization of the globe has an exponentially larger impact. And we think that's what's going to happen here. And the good news is, in year 4, we're seeing good signal. Before we get to the signal, though, we better see signal because the CapEx dollars are very, very large. These numbers are the annual capital expenditure spent by the 6 largest data center builders just on data center CapEx. In 2023, the 6 of them, Amazon, Google, Microsoft, Meta, Oracle, and CoreWeave, they spent about $140 billion. This year, they're going to spend about $760 billion. 3 straight years of 80% CapEx growth. And there is no sign of it slowing down. Next year, right now, you can see in 27, we have it up 24%. There's only upward bias to that number. The reality is, as we think about 2027 CapEx, the constraints are getting physical. It's actually this question of, can you really get enough electricians and plumbers to build 50% more gigawatts in the next 12 months? Can you really buy up 3 years of forward memory supply? Can you really get enough concrete to build 50% more data centers? So the point is, Keval talked about the $1 trillion and the $1 trillion being a big number. We may have the big 6 companies spending $1 trillion on CapEx next year alone. So as a stock analyst, I certainly hope there is ROIC on all this, because if there's not, we're going to have a problem with how to think about these stocks, valuations, cash flow, et cetera. Now, the good news is there is real ROIC. This is one of those common questions we get. What are they burning all this money on? Is this going to all be worth it? Like, what are we doing? So we've done a lot of work at Morgan Stanley, sort of thinking about how we think about the first $1 trillion of Gen AI-enabled revenue to come across the globe. There's a lot more detail in the note or in the slide deck if you want it, but I think the punchline is that what we thought and what we've seen is we sort of think that about 2/3 of the first $1 trillion of Gen AI or GPU-enabled revenue is going to be on the consumer side, the last third being on the enterprise side. And we've already sort of seen that. Changing consumer behavior is easier. When you go on Google and the Google algorithms get better and you buy more items, when you go on Meta and the algorithms are better, when you go on Amazon, you're actually having better matching and you're spending more per basket. When you're buying things through GPT, if the utility of products gets better, people use them. Enterprises do move slower. There are quarterly budgeting cycles. There are data privacy questions. There are data safety questions. There are data readiness questions. Enterprises move slower. So our work that we did last year sort of said, we think the first signal is going to come on the consumer side, and then the enterprise is going to follow. What we've actually seen is we underestimated the consumer piece last year. It came even faster than expected. And the enterprises, while they were slower than expected last year, the last 6 months have been very, very encouraging what we're seeing on the enterprise side. So we'll get there. We do a lot of monthly survey. I apologize for this Rorschach test. If you want the slide deck, just let me know. We do a lot of monthly survey work and scraper work, sort of analyzing consumer behavior and enterprise behavior. One of my jobs is really to sort of think about changes in behavior, and we also study what goes on in behavior. This just sort of shows, not surprising, in the United States, about half of people now are using GPT, 1/3 of people are using Gemini, 20% of people are using Meta AI. Hopefully they'll use it better. Hopefully they'll use it more now that we have the new Meta Muse. And you also do have these smaller agents on the right side, like Amazon Rufus, Walmart Sparky, and Target's shopping assistant. The Target one probably needs a rename. We seem to like to name agents like after dogs. Those seem to go well, Rufus and Sparky. The punchline here is we are seeing adoption across all these tools in the US on the consumer side. And most importantly, commercial behavior is stepping up. People are not just going on Google Gemini or going on GPT and saying, make me an image of dogs jumping over the moon. Write me a story for a lullaby for a 7-year-old that has to do with pandas. Make me a resume. Write me a recommendation letter. Practice interviews. That stuff is interesting, but really what matters is, are you seeing commercial behavior that these companies can monetize with all the CapEx? And you are. What you see now on the left-hand side is one example with Google and with Gemini. About 40% of people say, yeah, I'm researching new products. I'm trying to figure out what are the best new earbuds. What are the best running shoes to buy if you have a high instep? 40% of people are comparing prices. 40% of people are actually shopping. Travel is smaller still on the far right, but that travel is going to come. You're going to have the travel assistant. I think it's going to be one of the biggest unlocks to come in the next, call it 12 months. The world where everyone has a personal travel agent and everyone has an interactive travel itinerary, that's not 2 years away. That should be now. You can actually do it through Priceline's Penny or through the booking agent, and Google has it as well. It just needs to be rolled out, because if you think about how we plan travel now, it's still a very terrible experience in my opinion. You should be able to say to these agents, make me an itinerary for 7 days in Hawaii for my wife and 2 kids that involves 3 days of golf, 2 Michelin star restaurants, and I want to stay at a Marriott. It will build a whole interactive itinerary for you that you can then toggle the flights, toggle the hotels. Because Google knows the distance from the hotel to the golf course, they can actually pre-schedule you cars. Because they're connected with the restaurants, they can actually book the restaurant reservations for you. That product has been in labs for over 3 years. That is one we are really just waiting to have sort of debuted, hopefully sooner than later, because travel on that far right is an area that admittedly has gone slower than I thought. You just haven't had the killer product yet, but it's coming. And all that is to say, these apps on the consumer side, these agents, they're not just for informational behavior anymore. They are being used for commercial products, and I think you're going to see a lot more of that to come, with agentic commerce being one of the biggest unlocks that we have done a lot of work on that we're most excited about. I pointed out the idea of shopping for earbuds, but I think that everyone's going to have personal shoppers, not just for grocery or for travel, but for everything. As one example, I'm a big golfer. If I said, I'm looking for a new navy blue pair of Roan golf pants, size 34 waist, and I search for it now through Google and I can't find it, that's a bummer. In the not too distant future, Chrome is going to say, do you want me to look for you every day and let you know if I find it? And I'll be like, yeah, that's sweet. You can actually do that now, by the way. You can go into Gemini and you can set up an agent to look for items for you every day and price compare, and you can do that. I used it over the holidays. I had it price comparing certain toys my kids wanted, and when I found them at certain prices, I bought them. You have to be an early adopter to do that now, but the point is those products are going to be rolled out across these leading tools sooner than later. And before you know it, we are going to have agentic commerce that's going to digitize people's wallets sooner. And the time in which we have agentic adoption is when we don't have to say the word agentic. It's just when you say, look at this cool thing Chrome did. Look at this cool thing that GPT did. You're going to go on there and you're going to search for a new Lego toy and you can't find it and you're going to say, man, I wish I could know when it's on sale. And it's just going to say to you, do you want me to do a search for you every day? And you'll be like, whoa, look at that cool thing. So the agentic tools are coming. I use food as one of the big unlocks, and I know there's a high-profile startup here as well in this category. I don't know if they're in the room, but grocery online adoption is the lowest of any category in the United States. We think that unlocking the grocery shopper, the agentic grocery shopper, is going to be one of the biggest TAMs, quote unquote, to really crack through when it comes to consumer spending to come. It's a fun fact. In the United States, while 28 cents of every dollar spent by Americans is online, only 14 cents of dollars spent on grocery and CPG is online. So there is a lot. Looking at another way, when you look at e-commerce the next 10 years, 65 cents of every incremental dollar that comes online within e-commerce is grocery or CPG. So when you want to know what's the biggest bucket of spend in the consumer wallet that's going to come online in the next decade, it is grocery, bar none. And this is where there are real opportunities. Some of it's evolutionary, some of it's revolutionary. This is the example where you're taking a picture of your refrigerator and you say, well, I want to make a steak dinner, steak tacos. What do I need? It'll tell you it knows what you have with machine vision. It'll then tell you what you need. It'll build a grocery basket and bang, you can immediately have the items you need for a party. It's kind of unique. But the real breakthrough that I'm looking for is the weekly grocery agent that's personalized for you or personalized for your family. When it says on Saturday morning, good morning, Brian, here are the 35 things you and your family order every 8 days. I found a new dip that may go well with your favorite chips. I found a coupon on Topo Chico. I think your birthday's coming up. Do you need me to order more beer? Is there anything else you want for the Monday morning delivery? And I'll be like, no, this is amazing. So that is one of the big unlocks that we are very excited about, that there are multiple companies building out, pairing together your grocery data, the grocery inventory information, not only first party in warehouses, but also third party in a lot of the grocery stores that have partnered with these companies, and then ultimately the logistics to consistently deliver that to people. But this will be a very big unlock. There are multiple companies that I'm happy to talk through that are working on this, but I do think that when I look at the consumer wallet and what is going to really drive digitization of that the next 10 years, grocery is going to be a very big unlock, just given the amount of money that there is. But enterprises do matter, obviously. And it's cool to talk about groceries and earbuds, but we got to also digitize the enterprise. As you know, one of the big unlocks with all these models and all these agents is that we don't just analyze structured data, meaning Word documents, Excel, databases. We also get to analyze all types of data, whether it is video, speech, et cetera. It's the vast majority of global data. And companies now are finally starting to adopt some of these tools. You've had some very good signal over the last 6 months. This chart just shows U.S. labor productivity. One of the big unlocks that we're really looking for is labor productivity is low. Like U.S. labor productivity, I think the bar, I got a little screwed up. It's probably, I'm sure it's our side. U.S. labor productivity is far below long-term trend. And we think that AI can actually help this a lot. We think you're going to see a lot of productivity unlock with these AI tools as more enterprises adopt them. And that has a lot of profound impact for how we think about GDP growth, how we think about managing inflation, how the Fed thinks about interest rates. Bumps in productivity and what you hear companies yield benefits from adopting these new tools are a very important driver of the global economy the next 10 years. And the good news is you're starting to see signal. If I would have given this presentation in November, it would not have been as rosy, but now we're starting to have some spring. It's spring, flowers are starting to bud. So every quarter we do a lot of tracking with a couple of the models actually, as what percentage of the S&P 500 companies, when they report earnings, which we're in the middle of right now, talk about quantifiable benefits from Gen AI or next generation technologies. As of the last earnings season, the biggest source of adoption we had is information technology. It's probably not surprising. Tech companies are the earliest adopters. Almost half of them are now saying, we are seeing benefits that they are quantifying. And when we say quantifying, they're saying, we are saving $200 million annual run rate. We are seeing a 30% increase in efficiency in customer service. There is a whole litany of ways in which they are seeing quantifiable benefits of these early AI tools. The average, as you can see in the S&P 500, is about 20%. A year ago, that was 7%. So we have gone from 7% to over 20% now of overall companies saying, yeah, we're actually seeing benefits. And you can see the other industries that are also adopting it fast, financials, industrials, and sort of down the line you go as to which companies are adopting and talking about benefits faster and slower. As someone who works at a financial institution, I can fully say, we are part of that 25% of the financials, just the way in which we are pushing a lot faster to push out more tools, test more tools, try to find to redo my team. I have a team of 11 people. We cover 50 stocks in a bunch of different industries. I'm hoping that 1 year from now I'll be standing up here and I'll say, well, I have 11 people, but I have like 70 agents that are actually like working with us, sort of like helping us put out even more and be more productive with how we're doing this. So watch the financials industry. It's actually the fastest growing quarter over quarter bump that we've seen the last 2 quarters of financial companies getting on these conference calls and saying, yeah, we're adopting this stuff and the business models are changing. This just sort of brings up the specifics on what they're doing, but I'll leave that aside. The reason why I think we're seeing that is because we're actually in an inflection year right now when you look at historical enterprise technology adoption curves. So what this shows is this is how you look at a typical enterprise adoption curve. In this case, We look at Office 365 and then one other historical adoption curve as a precedent. You look at year 1 to 2, what percentage of workloads at companies are typically adopting new technologies? 1%. It's that early beta. It's that early test case. Does it actually work? Year 1 to year 2 actually isn't typically that big of a bump either. Enterprises move slowly. Remember, they're budget based. You go from 1 to 3%. But then year 3, which for most companies right now, we are either in year 3 of this or we're starting year 4 of this. Year 2 to 3 and year 3 to 4 are typically big years of incremental adoption. That's the year when you go from 2 to 3% of our workloads or 2 to 3% of our employees testing the new products to 10% saying 1 in 10, go use this product. It's more productive, scale it up. And then in the next year, you double it again. And so the way in which we're seeing this sort of uptick in companies adopting these tools on the enterprise side in the last 6 months is somewhat consistent with what we've seen with prior cycles, where year 3 and year 4, so that's this year and next year for most enterprises, I think is going to be very exciting for any of your companies that are addressing enterprises. I think there's going to be a lot more experimentation, a lot more scaling up of experimentation, and a lot more willingness to say we are going to press on adopting technologies the extent to which they work. Because this is the period where if you don't adopt the new technology and your competitors are, you run the risk of falling behind. And we're seeing it in some of the big companies that I cover as well. The enterprise adoption, we started thinking, what are the publicly reported numbers? There's some of the leading indicators of enterprise adoption. It's hyperscale growth. How quickly are AWS, Azure, and GCP growing? You look at the calendar, these are calendarized growth. Look at the 26 estimates. GCP is one of the ones that really stands out. The last 2 years, it's grown 37 to 40%. This year, we think it's going to grow 70. Could be better. We'll find out tonight. Azure, we think it's also going to sort of grow in the mid to high 30s this year. We'll find out tonight. And you can also see AWS, which has accelerated nicely to high 20s growth, could even be better. But I do think that when you think about enterprise adoption and broadening this whole tech diffusion idea of the economy adopting more of these tools, what we see from these hyperscalers, given they are sort of the enabler of these technologies and the railroad tracks of these technologies, is a leading indicator of what's to come. The other leading indicator are the backlogs. These backlogs for AWS and GCP, this is the forward bookings or forward billings that they have recorded, about half of which is going to be recognized over the next 2 years. They report these numbers. You look at 2023, AWS had about $155 billion backlog, GCP's was over $75 billion. Look what's happened now. We think right now, and it'll probably go up tonight, they'll report earnings tonight, that's why I keep saying that. It'll probably go up tonight. AWS is about $350 billion of business to be booked, half of which is going to come in the next 2 years, and GCP is going to be over $300 billion. If Azure was on here, it's the same. These are forward bookings being made by enterprises and small and medium-sized businesses of commitments to spend on these hyperscalers as a further leading indicator of adoption and diffusion across the economy to come. So if you're wondering, are we seeing ROIC? Are we at the appropriate point in this cycle? The answer is yes. I mean, the consumer pieces are getting more and more commercial behavior. You're going to have a lot of products that are going to be shipped that'll even further digitize consumers' wallets, watch grocery and travel. And then on the enterprise side, the constraint, that's the last one, the constraint to growth, it's not demand, it's supply. Like GCP, I know I have it at 70. It could grow 90 this year if they had the gigawatts. Like the constraint to all these companies' growth is getting the gigawatt supply and getting the capacity online. So all of these companies have so much demand from enterprises that they are going to keep spending. CapEx probably will go to $1 trillion next year if they can find a way to do it, because the constraint to growth, it is not demand. Demand is very strong. The constraint is supply. And so the bottom line is CapEx is going to go higher, so I still like the chip companies. And then the overall signal on consumer enterprise is also very encouraging. That's it. Thank you, everybody.
I'll introduce Jonathan in a minute, but just, again, so thank you to Brian. Brian lives in Texas, spends his time on the plane, as all great Wall Street analysts do, gave us the best tip of all times. You guys come here for private capital, but he's also great tipster for public capital. Semiconductors 3 years ago was a great call, so thank you. And now travel and online groceries. So travel, we can't help you yet, but online groceries, talk to Anna. Clove.kitchen is the website. Download the app, order your groceries through AI. So AI on Wall Street, now AI on Main Street. Jonathan, please, welcome.
Sure thing.
Jonathan Alferness has been a friend of ours for a couple of decades now. I was lucky to work with him at Google, where he led many of the ads and commerce initiatives. And then he's one of the rare individuals who went from Google, which is a web company essentially back then, to a mobile company, Lyft, and then a social networking company, Pinterest. And then somehow, one of the rare executives in Silicon Valley who ends up going to one of the largest companies in the world that is not in Silicon Valley, Walmart, where he was the chief product officer and just recently left. So the only guy that I know who went from like Google, Lyft, Pinterest, Walmart. And so you've seen a lot. And he's the perfect guy that we thought we could bring here to share his insights on, what's really different between Main Street and Wall Street and Silicon Valley. So before you say anything, let me give you some tailwind here. So I'm not sure how much people know about Walmart, but in the last 5 years, Walmart stock has appreciated 4 times more than Amazon stock. So if you had bought Walmart 5 years ago, you would be doing 4 times better. Is that right, Brian? Pretty much, right? And Walmart is now one of the companies that is over $1 trillion in market cap. So that's Walmart. So Jonathan, you were there for most of those 5 years. What did you do? What did you do there?
Okay, first of all, this is embarrassing, and your preview of our relationship together skewed a little differently than I remember. The way I like to describe Keval, in addition to being a longtime friend, advisor, and partner, is Keval was one of my first bosses at Google. And in fact, I think you were my first boss in product management. And I learned an awful lot.
Don't blame me, man.
So let's go back to Walmart for a second. It is, I don't know, from where I stood within the walls of Walmart, I think it's been an incredibly impressive ride for the company. I think if you step back and you looked at where Walmart versus Amazon was, say, 5, 6, 7 years ago, as Keval was putting it, you never would have expected that Walmart would have outpaced Amazon in terms of growth and a lot of the solutions that they're providing for their customers. Brian, you did just a fantastic setup for us for this discussion. I wonder how much of that was actually planned. But really the unlock for Walmart is exactly what Brian was talking about. Yes, it's all of the everyday goods that you might want, but something that Walmart was uniquely positioned to do that Amazon wasn't was deliver groceries from their stores to your homes and be able to do it incredibly, incredibly quickly. Now, Walmart got to this place by almost a happy accident, which was during COVID, there was this massive shutdown and all these stores were shut down. At the time, probably more than 90%, like 95, almost 100% of shopping for groceries at Walmart was done in the stores. With those stores being shut down, if Walmart didn't have another solution, the company would be in really, really bad shape. Walmart works incredibly well under pressure when there's fire to get something done. And that really started the whole ship from store, deliver from store ethos that brought fresh and frozen to people's homes in much the same way that you and I think about that instant delivery that we can get from Amazon, where I'll be frank, it works particularly well here in San Francisco. It doesn't always work as well in Middle America. And that's the juxtaposition of how Amazon was able to, how Walmart was able to take on Amazon and do so well, to your point.
So let's segue into that. It's a great point. So you build products for the tech advanced customers and then sort of the more mainstream customers. What's the difference between building products for the typical Silicon Valley customer versus the rest of America?
And I think it's a helpful exercise for us all to do and to put ourselves in the shoes of your Main Street customers. Because here we all think about how much technology pervades everything we're doing, even just listening to the conversations and seeing some of the adoption curves. If you flip that and you think about it more from Middle America, yes, they do tend to lag behind. Why is that? And bluntly, what I would say is that they're not interested in technology for technology's sake. They want technology that ultimately solves hard problems that they're dealing with on day-to-day businesses. And when that technology disappears into the problem solution itself, into the product itself, then they'll adopt.
So what's an example of that? I mean, Sparky, Brian referenced that, seems like, and by the way, the Walmart management team have been talking about AI consistently over the last 4 or 5 earnings calls.
Right.
And Sparky has been brought up both as sort of increasing the AOV, but also making efficiency in terms of fulfillment. What were some of the things that you did differently at Walmart in terms of product development that were different from, let's say, the Google experience?
I think again, so let's talk a little bit about the arc of artificial intelligence while I was at Walmart. When we got there, this is about, 4 or so years ago, it was clear to those of us here in Silicon Valley that AI was going to be a really big deal. But within the walls of Walmart, it wasn't that understood just yet. My boss, John Furner, who now runs Walmart globally, he got it because he was plugged into folks like yourself. So what we needed to do as a product team was to convince the company that this technology could be used to solve real customer and associate problems. And that's how we got our start. Believe it or not, and I think a lot of you will believe it, when I arrived at Walmart, the entire e-commerce experience based on top of product search was kind of broken. You would search for products that you knew Walmart had, and they just wouldn't show up on the results. You do other searches, and you'd get completely irrelevant results. Fortunately for me, I had run AdWords for a long period of time alongside friends like Keval, and I immediately recognized that what we were doing was keyword search. And so it had all of these weird artifacts. Yet for a company like Walmart to rebuild fundamental product understanding and product search would have taken hundreds of engineers over a long period of time. You can't just flip the bit and go from keyword search to product search in a heartbeat. And then we thought, well, what if we leverage components of large language models? What if we don't take AI and just slap AI at the top of Walmart and say it's going to fix all problems? But what if we decompose the problems that Walmart had with product search and we leverage those components of large language models, other AI technology to actually fix product search? Because then the metrics that we got and the improvement in metrics around searches, conversions, decrease in abandonment rate, massive decrease in support tickets would be something that would show up to the top line of Walmart executives like my boss, John, and we'd go, oh, wow, it looks like we can actually use this technology to improve our core products, to make our customers' lives better, easier, simpler. So we went from things like product search, then we thought about how we would unlock and make our associate lives in stores, for example, better. So Walmart, nearly 100-year-old company, often based on, when I got there, books. Every store would have a book that was like the handbook of what you needed to know if you were the store manager. So really simply, we digitized those books and we put them inside the app that associates use on their phone so they could ask questions much like you ask a question to Claude or to ChatGPT. From there, we moved on to merchant tools, and we looked at how we simplify the merchant experience in terms of building contracts and negotiating with suppliers. And then that led to things like Sparky and the like. And the momentum kind of built from there. So we went from real skepticism at the beginning about what AI could do. And that still remained. Even when I left and I was talking about things like self-driving cars in San Francisco, they're like, yeah, but I'm not sure that's going to work. And I left them with these thoughts of what's going to happen at some point when humans aren't entering your stores to shop anymore, but robots are entering your stores. Oh, John, that's never going to happen. But all along, we had moved the needle and moved Walmart along in this understanding of AI. It was pretty awesome.
Yeah, amazing. Let's talk about Walmart as a customer of AI technology. So big enterprise, right? When somebody from Silicon Valley, many of our startup founders were producing AI, or companies like OpenAI and Anthropic show up at Walmart on your doorstep and say, we have the latest amazing LLM that can do all kinds of magical things. How do you evaluate technology, AI technology that's pitched to you? What are the criteria that Walmart has for selecting technology? And then how do they measure ROI on their spend?
We'll get to ROI in a second, but in terms of actually adopting the technology, it was a big challenge. So we had proven that AI was valuable and it could solve problems for customers. But there was there still is a lot of suspicion within Walmart about partnering with large tech companies. There's a story, you can find me afterwards, I'm not sure that it's appropriate for stage, but there's a story of Google and Walmart's interactions in early days where various things were said and done on the Google side that really caused suspicion at Walmart about if we partner deeply with a Google or an OpenAI or an Anthropic, are they just going to turn us into dumb pipes? Where does this go next? So there was this real fear about giving up what we felt was our proprietary data around what products we had, what prices we were selling them for, how long it was taking us to deliver those products, because all of this we felt like was our secret sauce. And if we worked with a Google or anybody else or a Microsoft, would we lose propriety of that data? And for a while, and if you stretch your brain back and you go back about 4 years ago, it doesn't seem that crazy. We thought, you know what, we can build these LLMs ourselves. Like, how hard is this really? Now, when we look at things like, I don't know, Claude 4.7 or whatever, where you go, okay, there's no way a third party can build that, leave that to the foundation models. But we had to learn that the hard way. And when we started running into walls, what we did with my team is we partnered closely with OpenAI, because OpenAI was one of the first partners willing to give us a siloed siloed walls, so that when we and our associates, our employees, interacted with OpenAI for our own proprietary data, we did it within these hallowed walls. And that started to allow people to experiment with, oh, this is what this technology is capable of, right? Versus, oh, this little toy that we had built off to the side can't actually do this.
I've got a couple more questions,
Yeah,
but if you have questions in the audience, we have some mics, so we'll take, I think each of these panels will take a couple of questions.
Yeah, please.
So let me ask you, translate that in terms of how Walmart adopted or was skeptical initially from large companies partnering with them. There are a lot of entrepreneurs in the audience here, our portfolio founders who are building startups, and many of them want to sell to a large enterprise like a Walmart. So whether it's Walmart or your experience with other large companies, what advice would you give to these founders when they approach a large customer for buying their technology? What should they be doing?
I'll start with one that's kind of blunt. Don't start with a Walmart, right? If you go to the very biggest companies, the top companies out there, they're unless you really solve their problems and deliver for them 110%, you will probably burn your teams out trying to get there. So I would start smaller, and I would build up. I don't know how many people have come to me asking me, hey, I'm a startup founder, how do I get this in front of Walmart? And my advice to them has been very much the same. Prove that you can do this elsewhere. Bring that verifiable proof back, and then almost slowly climb the ladder until you get to a company like Walmart. As much as Walmart also has suspicion of the tech companies, Walmart should also be seen suspiciously as well, because like any profitable company out there, they want to get the most from you. And they don't, there's a growing understanding of Silicon Valley, but not all of the hiccups that we have in early days.
Just to give credit to Walmart, Gautam, I'm not sure if he's here in the audience yet, but Gatek, one of our companies that we mentioned before, Walmart was an early adopter of self-driving trucks. And in Arkansas, Arkansas has approved, one of the 4 states in the US that's approved autonomous trucks, and have been great customers for Gatek.
It's a great success story, and we can contrast it just to kind of keep us even keeled here a little bit with how much Walmart thought that autonomous checkout was going to solve a lot of their labor problems. So there was a deep investment that we did across Walmart on autonomous checkout. We built a lot of the technology ourselves, and in fact, we got close in a lot of ways. But if you then think about that, scaling that to the thousands upon thousands of stores they have, 100,000 square feet each, there's no way that the technology would actually work flawlessly in a way that you could, at least today, reduce that headcount. So you both see these success stories with early days, but you also see companies that have tried very, very hard where it's failed as well.
Yeah. Two quick questions for you. Putting your, not just your Walmart hat, but your other hats as well, through all these experiences you've had. Tell us about privacy and the average American, the Walmart customer. How much do they care about privacy? And in this age of AI, is privacy really going to be a consideration for users in terms of adopting AI products?
That's a hard one to think through. I think every human ultimately cares about privacy, but again, it's traded off with how much are these tools just improving my life and reducing my friction. So as we're showing more and more, and not just to the folks here in San Francisco or the Bay Area, but across the globe, how AI can help you get more done with less. It's the 10x multiplier, the 100x multiplier, whatever you think of. I think folks are willing to look the other way, or at least not worry so much about privacy as they might. That said, the second we see, a major blunder or slip up and everybody's data gets leaked from an Anthropic or what have you, I think folks will retrench and will react a lot. But I think the privacy story is settling down to some degree.
Okay, so flip side of privacy is advertising. You built one of the best ad model on the internet at Google, and there's a lot of talk about ads in LLMs, ads for AI, because ultimately people don't want to pay $200 a month. You might have to make it affordable. So what's your take on what does the ad model look like for AI?
I think it's been a fascinating thing to watch, right? I think one of the things that I've been really surprised by was, when OpenAI ChatGPT announced, we're going to put a buy button inside ChatGPT. I thought to myself, really? Is it, it's like 1999 again? Like, is this eBay? What's going on? And then Walmart jumped in pretty quickly, and I thought, this is crazy. They were just super worried about how their data would leak, and now it's like, no, we'll put our stuff in there. You put a buy button, send people. It's going to be great. How long did it last? Does anybody know? 3 months, 6 months, something like that? And where are we now? We're kind of back to some of the same old models that we've had in the past. So I think we've seen this time and time again. We saw it in the .com. We saw it in mobile. We're now seeing it in AI. But I do think there's an unlock. And I think the unlock is actually something that we started working on at Google years and years ago, which is instead of what's the new ad format or how are we going to automate ads, which is all things that artificial intelligence is doing, we're moving to a world in which what people really care about is outcomes. What I used to call at Google transactions. I no longer want to, this is when I was running the shopping and travel teams at Google, I said I no longer want to lead people to an intermediary site or something just so that they can click again and then end up doing the purchase. Instead, when I'm on Google and I say something like, hey Google, I need more paper towels, you've got all my credentials, you know who I shop with, why don't you just take care of it? So we're seeing this in the SaaS businesses today. I think we're going to see this more and more in consumer businesses. I think we're pivoting to a pay-for-outcome type model. And in that world, I think it suddenly fits, this notion of advertising suddenly fits within the framework of AI, of ChatGPT, of LLMs that we've been building. Where I'm a little bit perplexed by it, but still seeing some vestiges of it is, we can help you boost your own brand within, whether it's ChatGPT, Claude, et cetera. To me, as a user, I see these tools as neutral. They're going to give me the right answer regardless, and they won't be influenced by promotion. But if you do tasks for me and you get them done and get them done well, that, I think, is the unit of economic value in the future.
Great. Are there any questions in the audience? I'll have one more question.
Everybody's quiet.
All right, last call for questions. Okay. You've been involved now with a lot of startups, advising them, I think maybe doing your own. What are you most excited about in the next few years as all the stuff we talked about earlier? What is the one thing that if you could do that would be like your dream come true?
Well, that's a great question. I think more and more what we are seeing is an agentic world where these agents can actually bring context together, not just for me, but for my entire team. It helps us stay on the same page. It helps us align. But ultimately, it's going to help us take action and get things done at a scale 10x our team, 100x our team. So I'm working with a small set of founders. We're working on multiplayer AI workspaces for revenue operations teams. I mean, it's so obvious. You can bring together and consolidate all of this information in a single context. The entire team can then be aligned around that context, and then you can take actions based on what you're seeing. I have not had, and I told Keval this when we were meeting a couple months ago, I haven't had this much fun building and playing with technology in like 20, 30 years. It brings me back to when I was a kid. The capabilities that we have to build and to build complex software. These are no longer prototypes. I'm blown away by how I can sit down in front of Claude Code on the command line and build solutions, technology that really boggles my brain. There's no way I had the ability to code this stuff even 2-3 years ago. Now it's no problem. Back to what you were saying about Gen Z and the kids being all right, I still think you want engineering mindsets and you want to think like Lego blocks and figure out how all this stuff fits together. But you no longer have to worry about all of the trudgery of the syntax and bringing, actually writing code. That is going to make it so much faster for everybody to build software. The cost of building software is effectively going to zero. I think the challenge in the future for product managers and the like is going to be what not to build, what not to ship, right, rather than what to ship. And so I'm really excited about the future. I'm excited about this multi-agentic future, but I'm excited about bringing it to life in a way that teams continue to stay human, aligned, and collaborative.
Amazing. Thank you, John.
Thank you.
But we're back for the second half of Shakti, the Imagination Era. I'm Jessie Haynes, partner at Shakti, and I have the privilege of, where's Bindu? You're up. It's the founder panel. I have the privilege. I just looked over there. I said, oh, there's a missing seat. I know you're here. I know she's here. I have the pleasure of having a conversation with 5 of our Shakti CEOs, portfolio company CEOs, and I'm super excited about this conversation. There are actually quite a few founders here in the audience. So before we jump in with these guys, if you are a founder, a Shakti CEO, portfolio company CEO, and you're in this room, can you just stand up? Because this is all about community and the flywheel, and I want everyone to know who you are. Yay. Do you want to just, yeah, there's, okay, can you just like wave and quickly say your name and your company? Awesome, we've been hearing a lot about that, autonomous trucking. Mitsubishi, trusted safety. Awesome, awesome, awesome. Anyone else we're missing? Oh, excellent. Great, so get to know each other, talk. The flywheel is in action. This is it. This is how it all happens, by talking at gatherings like this. All right, ready? Let's jump in. So today, it's about the Imagination Era, and these are the Imagineers. I think there's like a Disney museum right around the corner. So these are the folks that are building the future. And it's going to be really interesting to hear about what they are building and how they are building it. Because as we know, building in the age of AI looks a little different from building in past decades. So let's start by getting to know who you are. And we'll just run down the line. If you could introduce yourself by way of what it is that you are building, and also why it's going to be relevant 10 years from now. And we'll start with you, Mert.
My name is Mert. I'm from Turkey. If any of you are from Turkey, hello to you and to the rest. I'm the CEO of a company called 24/8, and we just signed a deal with DoorDash yesterday for $150,000 per year. What they're buying from us is general purpose agentic researchers. So they want to know if restaurants are on Uber Eats, if they're on Grubhub, what's on their menu, what's the name of the owner, what's the LinkedIn of the owner if they're on LinkedIn. Anything that you can find by essentially spending a lot of time Googling stuff. We build this as an API endpoint for them. This is our first pillar of 3 pillars of building a human-like AI seller. I use all 3 of those things, but what's for sale is just a researcher for now. And we're selling this to food and restaurant tech companies. And the reason why I believe this is going to be relevant in 10 years is the way we sell, just like how we do anything, is about to change with these personal assistants. I sell with a little sidekick on my side. The way I closed DoorDash was I first asked my little assistant, hey, who's the relevant people I should reach out in DoorDash? It identified 50 Northwestern and Kellogg alumni. I'm a professor at Kellogg, so those people are likely to respond to me. I met 35 of them, and one of them was the right person. The whole deal end-to-end took 2 months, which, again, for an enterprise deal like DoorDash is lightning speed. This is the kind of power we want to give to all salespeople everywhere. And that's why I think it's going to be relevant in 10 years.
Awesome. Thanks, Mert. Over to you.
Yeah, I'm Chiran. This first time in the US, so sorry, bear with my accent.
Welcome.
First couple of days, first 48 hours in the US. We're so happy you're here.
So bear with my accent. I'm so adaptive. I'll be with you for 1 week, and I'll be one amongst you. That I can guarantee. So yeah, we are building this space company, last 7 decades, if you take, only 20,000 objects were sent into space. Now, like Keval said, the satellite launching costs are coming down. So now in 1 decade, 1 million satellites are going to be launched into space. So space is going to be really crowded. And people can leave their dead satellites there forever, but now the regulations are coming, forcing the satellite operators to remove their dead satellites from space. That is creating the market, and we saw that opportunity. And I was there with the space agency, Indian Space Agency, for 15 years, moved out and started this organization called Cosmoserve Space. We are building robotic spacecraft that goes to space, capture the dead satellites, and remove it from space. That's what we are building.
So you might have seen the picture of what Chiran is building in that initial video. It's very, very cool. Awesome. Thank you for making the trip to be here. Masoud.
Hello, I'm Masoud. I'm founder and CEO of Studio Jadu. What we are doing at Studio Jadu is we are reinventing the way stories come to life, are distributed and monetized. What does that mean? We are doing for the movie industry what iTunes did for the music industry. If you haven't done this, go on YouTube and search for Star Wars fan fiction, and you will see a lot of content that Disney is very scared of today. But we are solving that. We are building a marketplace and a technology where creators can bring their stories to life. And if those stories are about the IP they love, they can partner with the IP owner. So Disney wouldn't be scared of their fans and want to sue them. Disney would partner with them and tap into their creative power to turn their locked IP into living IP. IP that is told in many different ways, an IP that lives and reflects the pulse of the culture around the world. Just one quick aside, I built a multi-billion-dollar business at TikTok, a brand advertising business at TikTok, by tapping into the creative power of fans to tell the stories that brands want to tell. What we are doing here now is a different version of that. And why are we going to be relevant in 10 years? Because the impulse to create is universal and will be with us for a very long time. And we are here to serve that impulse in a way that rewards the creator and the IP owner.
Great. Thanks, Masoud.
Hello, everyone. My name is Amber, and I'm the founder and CEO of NextWork. And NextWork is all about the next way of working and the skills that humanity is going to need for that. So we specialize in teaching AI skills all over the world. Why is this going to be relevant in 10 years? I think that learning and education is just kind of fundamentally changing on 3 really critical fronts. Frequency, Keval talks about the toothbrush. I think that education and learning used to be more like a dentist. It was expensive, no one wanted to do it, and it just kind of was really painful, Now it is like a toothbrush. The tools have changed, the needs have changed, the demand has changed, and it's worldwide. It's every country, all ages, and it hasn't been solved. The other area that's changing around education is pricing. It's expensive and it doesn't need to be. So the demands are changing. We have high school students on NextWork that are saying, hey, we're not going to universities and high schools aren't teaching us what we need to know. So what are these people going to do? We've got an aging population. We've got an increasing retired population. What are they learning? What are they going to do? The whole system is broken and fundamentally needs to change. So we're providing that solution through entirely hands-on portfolios. We believe that LinkedIn can be replaced with a skills-based and portfolio-based way of recruitment, and that it starts with a fantastic learning experience. So that's NextWork.
All right. Hello, everyone. My name is Bindu Reddy, and I'm the CEO of Abacus.AI. First, a quick pitch for our product. Try it out. It's called Chat LLM. We have millions of customers. You'll love it, so hopefully you'll try it. That said, I am a little contrarian. Our whole vision right now is humans need not work. And we are hoping that'll happen really quickly. And we think that's actually happening in many ways right now, right? We are beginning to start seeing developers especially have use AI mostly to get their work done. And that's what we do right now. You won't believe it. I'm myself surprised. I actually ended up doing 9 PRs yesterday. So I had not coded for a really long time, but now I'm actually writing code. But TLDR, Abacus.AI is here to automate work, automate white-collar work specifically, because we haven't done robotics yet. We have about 200 plus really large companies, including a few dozen Fortune 500s who are using us. We're still early on in the journey. Competitors, obviously, Anthropic and OpenAI, much bigger than us. But we believe in LLM optionality and AI optionality as well. So that is what you're going to bring, we're bringing to the world. All the infrastructure, all the tools, all the automation, except with all the AI. So that's who we are. We'll see how it goes. But yeah, happy to be here.
Awesome. Thanks, guys. So yes, reimagining the way we work, the way we learn, the way we create. Let's dig in a little bit to the things that you guys are doing. And I want to start with you, Amber. So NextWork's gotten quite a bit of traction. Last I checked, you had almost 200,000 learners across like 190 countries. I don't know if you've crossed that 200 mark yet. Hope soon. NextWork must be learning a lot about what people are trying to learn, where they get stuck, what they give up on. So what are you learning from what you're seeing in your own product about where education is getting it wrong?
Great question. I think there's a lot of interesting learnings, like just globally, about how different countries are adopting AI that we're seeing. A reason that we actually just moved to the US from New Zealand. And part of that was because the US, the way that a lot of people in America are actually learning AI, is already building on such a heavy base of knowledge. Whereas when you look at a lot of our learners in Africa or Philippines, Malaysia, like these sorts of countries, they're going from primarily mobile AI use, and going from like a much larger jump. So first of all, like we're noticing a lot of differences in terms of different countries and the way that they're trying to learn and the amount of scaffolding that someone needs in America versus someone might need in Africa in terms of foundational knowledge. It doesn't actually slow down their rate of learning. It just means that you have to provide more scaffolding early on. And I think the other thing that people are missing in learning is that it's not just access to content. It really is a trust issue between society and the skills that people are learning. 1 in 4 job applications by the end of this year are AI fakes. And that poses a huge problem for recruitment. If anyone's tried to hire or recruit recently, you'll know that every resume is AI generated, every coding application is done with a programming tool or an LLM. So how can you actually trust what skills someone has? How can you tell for sure? And I think that's part of the equation that a lot of education companies are missing when it comes to why learning will be successful, why NextWork is going to work, is because it comes down to proof of skills and how can you scale that.
Let's stay on that for just a minute. You've kind of like declared war on the resume. The NextWork pitch is that a certificate or a thing on paper is not nearly as meaningful as a portfolio of projects that you have completed, where you can literally show. And I'd love for you to tell the quick story of the person who, the janitor that got a job in that way. But so makes sense. But yet, like, we're still using resumes. That's a lot of the way that people are still hiring today. So how are you setting your NextWork students up for success with these portfolios? And do you really see things changing?
Yeah, absolutely. Absolutely, we see things changing. And you can actually see the demand when you look at a hiring process. Degrees have long since, for programmers and computer science, early adopters, degrees have long since kind of gone to the side as the only proof of skills. And instead, proof of skills comes through a hiring challenge, it comes through technical take-home challenges, but that's really just like a symptom of a much larger problem. Which really is like, how can you prove what skills someone has? GitHub is probably the best portfolio site that exists because it isn't trying to grade people. It isn't trying to say, this is our badge or our stamp. It's just saying, here the work. If you're a bad programmer, your GitHub portfolio is going to look bad. So we take the same approach on NextWork, where everything is just a fantastic way to capture what you have been learning, what you have been building, and do it automatically. Because building a GitHub portfolio still takes work. And now trying to showcase your AI skills isn't just a software engineering problem, it's a every person and every industry problem. And not everyone is on GitHub, git add, git push, git commit, like that's not for everyone. It's people want something beautiful that's gonna work. So the janitor story is one of our learners ended up getting a job as a janitor and was trying to get into tech. Did a couple of big certifications, AWS, Google Cloud, all these sorts of things, wasn't able to get in. 100 job applications, 200, 500. Ended up applying for 2,000 jobs, 0 response. The certification is well and truly buried and dead. Found NextWork on Instagram, check out our Instagram channel, and ended up doing a lot of real-world projects. Was working at a community college as his janitor, and was literally cleaning up the marketing department and overheard a discussion about they were hiring for an IT person to help with their marketing site. Pulled out his phone, pulled up his GitHub portfolio, and started talking through his projects. They said, wow, we've never seen someone with an actual portfolio here. Do you want to come and interview tomorrow? He interviewed the next day and got the job. So that is the proof of like real evidence, real work. It's not just better for your learning, but it actually works in the workforce, and that's important.
So I love that story. Okay, let's talk to Chiran. You've come all this way. You are building a thing that goes up into space and cleans out the defunct satellites. You were, and Keval talked a bit in the beginning about like S-commerce. You were working for 14 years for the very prestigious Indian Space Agency, and decided though that to do this thing, you were going to leave and start something up from scratch. Tell us a little bit about your thinking process there.
Yeah, I was a part of the global space debris community. So that is a community of 13 space agencies, including NASA, JAXA, ISRO. So every year we come together, we discuss about this problem. We see what are the technologies available to solve this problem and where are the gaps in the existing technologies. I saw that the problem is going to be really big, but the technologies are not coping up to that. Someone has to really go and do that. Why not me, is what I thought. And also in India, India is one amongst the top 4 spacefaring nations. But the share of India in the global space economy is only 2%. So then India decided that let's open space to everyone, not just ISRO do the activities, let everyone do the activities. And the mandates are clearly defined. ISRO will concentrate on R&D, research and development, and sending missions to Moon, Mars, scientific missions. And wherever there is a chance of commercialization, that the non-government entities or the private players should take care. So that is, again, a plus point for me to start something on my own, because there is a great commercial sense to what we are building. Mm-hmm. So that's how I started this journey.
Very exciting. I spent a lot of years at Google, and a lot of us have been working in the digital space. And, we launch and iterate, you can change. You are building a physical thing that has to go up into space. And I'm guessing that launch and iterate is probably not a mantra of your team. Tell us a little bit about what it's like to build in this physical world and for something that is literally going up into outer space.
Now, three important aspects in space. One is mass, volume, and power. So these are the three important constraints in space. Whatever we develop has to follow or obey these constraints. And that's one thing. And the second thing is when the rocket is going in space or going to space through the atmosphere, it will experience vibration, shock loads, vacuum, and then extreme temperatures. So when you design some systems, you have to understand that all the systems should function in all these environments, at the same time should obey mass, volume, and power constraints. So that is one thing which we all learned while we are building systems at ISRO. And another thing is today I was traveling in Waymo first time. So really quite a good experience. So in Waymo, there are LiDARs, the laser devices, and cameras, which is giving the real-time data. But then it is also having the existing data of the roads, etc., which is not available in space. We don't know how the objects looks like in space. So when you need to collect the real-time data, but you really have to deduce that data to something and then identify that this is the object which you are looking for and go near that. That is a big challenge and which we are trying to solve in very near future.
Yeah, very cool. Mert, when you walked into that cocktail party last night with a big smile on your face, I knew the DoorDash deal was in. It was God. Like, you know, still hanging, and I could tell that you'd closed it. So congratulations.
Thank you. Thank you.
Why are they going to use your product?
Well, they're using it to basically decide which restaurant is more likely to buy DoorDash's services. By the way, I just want to give a quick shout out to the greatest feeling of all time that every founder likes to feel. When the DocuSign hits, that feeling just does not go away. And that's, frankly, the motivation behind the company is to make that feeling happen more and more and more. I'm basically an addict to that feeling. I get the night sweats, if no deals close in near time. But DoorDash wants this information because there's 750,000 restaurants in the United States, and it's kind of difficult to decide which 10,000 DoorDash should go after next. It's like we're giving them a crystal ball and telling them, hey, this is currently on Uber Eats and this is their POS provider. They make for a better lead for you. It's almost like putting a little star next to a particular lead to tell the reps that this is the one that they should go after. And this kind of list building is one of the core activities of what every salesperson needs to do. Right now, they use Google Maps and clicking on their computers to do this, especially for a company like DoorDash. They have a lot of field sellers. They're on the road. Their job is in a car driving to a restaurant. So the price of knowing this is the right restaurant to go after is really, really high for them. And we're going to the National Restaurant Association in 2 weeks. There's 2,000 companies in there that also sell to restaurants and bars. And my question is, can I find 5 more DoorDashes in there? I think I can.
I hope you can. I hope you can. Masoud, we saw some clips of the things that creators are making with it in Studio Jadu in the opening video. And I think there's been a lot of conversation around the tension between AI as a creative tool and AI, replacing creative work. Talk to us a little bit about how you're navigating that fine line at Studio Jadu.
So we are betting on people's creativity. The model that Studio Jadu has is we fund a creator's vision, and then we distribute and monetize it. And if it's a good one, they make money, we make money. So we do not want to create AI slop. In fact, the difficult task we have undertaken is to take away the grunt work so creators can come with an idea, turn it into a real story, but we don't want to write it for them. And then turn that into animation, but we don't want to decide all the angles of the camera, all the shot lengths. Let them decide, because that's the human feeling. And this is not just good PR, it's actually good business. So I don't know, probably all of you remember when 3D movies came out And we all went to watch the first one. Doesn't matter what kind of garbage movie it was. It was 3D. We wanted to watch that. By the time Avatar 3 came out, well, we went to watch it because it was Avatar, but we didn't watch 3D anymore. It didn't matter anymore. It was a story that was important for us. Unfortunately, it didn't have a good story either, so that was a complete letdown. But what I'm trying to say is, at some point, the spectacle of AI and AI images will just become, nobody goes after it. It's a human creativity and the story that we want to go after. We have been telling stories around campfires forever, but then in the past 100 years, technology took that right away from us. It was only Hollywood who could tell the stories because they had all the power, and every piece of technology made it more expensive to tell stories. We are reversing that, and we want to bring storytelling out. So this is, in fact, it's very easy to say, give me a prompt, I'll give you a video. That's easy. It's very easy to say, look, I'm going to give you all the tools, you decide what you want to do. The difficult part is right in the middle, where you want to take away the grunt work, but also keep the creativity and storytelling out. I hope some of the shows that you will see on Studio Jadu communicate that there was a human decision behind it. And we think this will be eventually, we are betting on the long term that people will go after stories, and that's what we are going to fund.
Bindu. You have built this incredible platform where you have all these AI apps that are doing the things as we've all been talking about, taking away some of that grunt work so that we can imagine. I think you have been bold in your claims that, white collar work is going to be, done by whatever, sometime in the near future. You're sitting next to Amber, who's teaching skills to people. And I think that this is an interesting, so how do we reconcile?
No, I think that's a good question. I think I said the word work, right? Work is not like a really great connotation when it comes in, when you look back. Like, people don't love to work. People love to do things they like. So I think work becomes, Elon says it, so you may have heard it, but work becomes optional. Right? And so I don't think it's about, hey, I have to go to work. It's about I have to follow my passion. That is what I think the future should be, right? And whatever that could be, your passion could be sitting on a beach. That's cool. You can go sit on a beach. Or your passion could be developing the next best, beautiful video. And you should be able to do that. I think humanity gets to that utopian state. Of course, I might be too idealistic, over the next couple of decades. So some of this is starting now, which is automating kind of what we call, grunt work, or what we call work more and more. And I think what you're doing is enabling that in some ways, right? Getting AI to do more of the work so that people can actually think, imagine, be creative, do other things, and that sort of thing. So that is what we intend to do with what we've been doing so far. I think all of you all have done this, right? Like, show of hands. Who's used AI to build a PowerPoint? Everybody. Who's here? Who's used AI to build an app? Most of you all, right? And who's automating, let's say, 20% of your work today with AI? Yeah. So you've got lots of you doing that. And that 20 will go to, who thinks it'll go to 70 by mid next year? Few, not a lot. We now have some skeptics.
For some of us, it's already there.
For some of you already there. Oh, yeah, there we go. Right? So, I'm not making this up, right? We're not like, hey, so I think this is going to happen slowly, but it doesn't mean that you're doing nothing, clearly. It means that you have, you have space to do other things. And I think we're going to also see a lot more companies. Before, we would see a lot more consolidation. So far, we've seen a lot more Googles or the few Googles and Amazons become really big. My hope is in the post-AI era, we see a lot more smaller, more successful, more creative, more original companies, which will create a really great ecosystem, I hope. We'll see.
And so as this transformation takes place, tell us, make it, how are enterprises using Abacus to refocus employees, shift the responsibilities, open up more time for other stuff?
So just to give you an idea, a lot of our companies usually spend around, or we basically charge them around $90,000 to $100,000 a year, right? Now, a few dozen companies are gone up to like $400,000 a year. This is not just to say, like, I'm using that number just as how much AI they're applying in 4 months. This is the difference between December to now. What happened? Basically, what happened was a lot of these good models, you've seen them, Opus, GPT 5.5 have shown up, and now it's actually automating things. And what are companies doing? They're actually rushing to go off and give these tools to employees. So employees are beginning to build apps inside. That's a new big thing, right? Everybody's building their own app so that they don't need to necessarily go get their own Salesforce or even create, go buy like a huge SaaS application. Instead, they're building custom applications inside the enterprise, which are really custom built for their automated process or for their process. And that's happening in a very big way across the board as a starting point. We're seeing people kind of beginning to say, here are all the things my employees are doing. I'd rather have them do this instead, so let's go automate these things. So I think we're seeing that acceleration curve in a very big way. It started with PowerPoint, docs, now it's getting to apps. The next step, we believe, is automated tasks. And all of this is hard to do correctly, because AI makes mistakes. AI is full of slop. AI gets things wrong. And we're also seeing people automating software engineering, and that's a really big deal, too. And I think it'll slowly move. And I think a lot of the companies are also thinking about how to repurpose their employees to doing something different, doing something more, also like kind of expanding their businesses.
Great. So we've talked a little bit about what these guys are building. I want to shift gears a little bit to the how, because you all are building AI native companies. You have started these companies in the past 5 years. Some of you have built companies before. And I'm guessing that the way that you're building your company today feels a little bit different from what a company that was built, 10 years ago in 2016. So talk a little bit about how building a company in the age of AI is different from, and why it might be that even the companies that are kind of retrofitting and scrambling might have a harder time kind of catching up. And I'll open it up to the group.
I'll jump in here. The trade show coming up in 2 weeks is a good example for this. In my first company, we had 20 sales reps before we figured out how we can sell our product. In 2 weeks, I'm going to go to this trade show. There's 2,000 companies in there. They all sell to restaurants and bars, so I know there's a good chance that they can use our data. What I want to do is first, I want to know who's attending. So somebody go out there and Google the crap out of it. There's no given attendee list. All we know is the list of companies. Find the people who are likely to be there. My agent did that in a day. There's 21,000 potential attendees. Next, I want to reach out to them. But you know what I want to say is that if the company's making pasta machines, I want to say to them, hey, pasta machine company, I can send you a list of restaurants who have handmade pasta on their menu, and the ones that opened up last month and the ones that changed their menu last week. You want to see them? I got it. And I want that to be done 20,000 times. So every single person, to every single that they're selling, I want there to be a relevant email instead of saying, hey, I'm going to be at the show. Want to chat? Which I'm probably sure they're getting 50 times. But the email that I send is literally going to have, by the way, in case you're wondering, here's 20. I did it for free for you. And third, it would be, hey, let me keep everything organized. I want to update my CRM. I have not met a single sales rep in my life who said, I want to wake up this morning, boy, do I want knowing what I want to do? I want to update my Salesforce. No one said this ever in the history of all time. All of this, what I'm describing to you guys, is kept up to date in a CRM, perfectly up to date, telling me, hey, here's the next person that you should reach out to. When the DoorDash deal closed, my agent told me, hey, by the way, here's the 32 people that you spoke with that wasn't really helpful. Here's the follow-up email I would send to them. There's probably $1 million in DoorDash we can get. What do you want to do next? This is insane. My work is automated, but in the spare time that I have, I'm not sitting on my butt. I think I'm going to be able to get to $10 million in sales as a solo founder, which is insane to me. Like, this just wouldn't be possible in the past. So to me, the bar is raising. When I hire a sales rep, I'm going to give them a playbook to say, hey, do these things. And by the way, there's a person sitting next to you. Their name is Benjamin. Guess why? You'll figure it out. Their name is Benjamin. They'll help you out making a lot of Benjamins. And they'll tell you exactly what to do next. I think Jack Dorsey had this idea of like, AI is the boss. we are the people implementing the things that AI is suggesting us to do. And I'm incorporating this in a sort of a sales-first manner. We're a sales technology company. We help serve sales teams. But this is fundamentally different. And this kind of lens in terms of output expectations is totally different than what it was before. And there's no way you can compete by hiring 100 sales reps with a company that is operating in a principled manner like this.
Whoa. Who else? Tell us about the journey of what.
I think what you just said is basically the new age company, right? Which I was just describing. I think existing companies with thousands of employees are going to find it very difficult to pivot into that, and because the existing people, the problem is the people. Because they all have different roles which probably need to consolidate or like become like, more kind of important in some ways. They should have more ownership, which they don't have. So take Google. I don't know if you guys read that tweet, a week ago, where somebody from ex-Googler basically said Google is in like medieval times or things like that, right? Because they haven't like really managed to use AI coding yet. I think the startups here are going to grow faster, which we're seeing, and do better.
So I would add to that what we are hearing, exactly what you said, some of the things that we can imagine are doing the same thing 10,000 times faster and 10,000 times cheaper. And that's absolutely right, we should do that. But I would say, you also mentioned something else, that's first one. You hinted at second one, which I think is even more important, is what should we be doing differently? Not just faster, but very differently. I'll give you an example. We have artists who we are hiring to test our own system. We have a team of 10 artists in India with Bollywood credentials to their name who are now using our system to create content. But I've also been telling them, guess what, you're also product managers. And they're like, huh? I said, yeah, I know your feeling. You said, I don't want to do that. Sorry, can I use the word shit? I didn't want to do that math stuff because I went to art. Now you're asking me to do that. I'm saying, no. Product management means now you need to help us redefine the way work gets done in your field. And we are, in fact, hiring for that. So we have changed all of our hiring. We are looking for people who can use judgment and not just do the grunt work. So a lot of the work that I do with the team is, first thing you do is don't ask for, hey, automate this thing for me, AI, is, okay, here's my ultimate goal. What is the way to go about it? And then go automate that. And by the way, the other thing is to throw AIs at each other, So it's changing of the work and change. I'm going back to what you said. A lot of this, or companies have specific roles. But guess what? Now you have new roles, and 5 of those have to be combined.
Yeah.
How do you do that?
Yeah, so you've got roles consolidating, you've got Benjamin working with everybody. What are some other things? Amber, you just moved your team from New Zealand to Austin. How are you building that team? How are you growing that team? Where does AI fit in?
Yeah, I can probably talk about it more from a product lens, like building product. It really changes a lot. So in terms of bug fixes, we talk about picking up litter in the product, which is all those little things that you want to change, the polish, the little bugs, like things that are annoying. They're not big features to ship, but that's an everyone job now. Like whether you're on marketing or community, whether you've got engineering degree or not, like everyone's pushing PRs. Last week, we only have 2 engineers. We pushed over 70 PRs. Which is a lot. And probably in the last month, we've shipped what would take an engineering team of like 5. Probably 2 or 3 months, we did it in a month. So definitely the speed is changing. And the design as well, if anyone's interested in design engineering and how that's changing, I think Figma is pretty much dead because the MCP isn't keeping up with a lot of the tools that have been made for native design, where you can just click and drag and then like convert straight to React and you've got a product. So you don't have to be in the terminal anymore. You can really start to use a lot of these AI native design tools. Other things, random like fun things that we're seeing, token usage is really expensive. Our engineers, when you've got a whole like group of agents that are running things, a big cost is actually understanding the English language. So when you're prompting, it's expensive to read all of the prompts. It turns out Mandarin actually has less characters than English to get the same idea across. So if you can get your agents to talk to each other in Mandarin, then you use probably like 40 to 60% less token usage. So random stuff like this just comes up. And if you want to learn how we do it, then we've got projects on it all on NextWork. We really use ourselves as trying to be an example of what is the future of working going to look like. So we're an AI skills company, and our goal is to push the boundaries of this every day.
Yeah, I'd not heard the Mandarin hack. That's interesting.
Yeah, everyone answered how it is easy operationally. Technologically, I will say something. From decades, there used to be capsules going in space and docking with each other. That's where the humans will be transferred from one capsule to the other capsule. This is all happening in space from many decades. But these two are cooperative targets, or cooperative chaser and a target, that they both communicate with each other. There are proper markers on the target so that the chaser will go and capture that or dock to that. But now what we are going to do is capturing something in space which is non-cooperative. So the non-cooperative capture in space has got multiple applications, which is only possible with AI. Without AI, it is not possible. So that is one technological advancement which we can see now, which was not possible 15 years back. And yeah, operationally, I agree with all the points here. And what we do is we used to take months to do literature survey when we start some work, and that is now being done in a half an hour time, 30 minutes time. So that advantage is there.
I'm going to open it up to questions. And how much time? How much time do we have?
3 minutes. 3 minutes.
Oh my gosh, 3
Somebody
minutes.
else could.
Okay. I meant to open up for questions earlier. Yes.
Yes, so I have a question. If you are a parent and you have an 18-year-old selecting some kind of education, or maybe not, what would you recommend this 18-year-old to do in order to fit in this new world?
Oh my gosh, that's a great question. It was actually going to be my closing question, so we're going to answer it. It's not going to be my closing question because there might be some other from the audience, but I think yes. Many parents in the audience. What should our children be learning?
I'd say start working now. They can actually wipe code and start building apps and start working now, right away. No need to go to college.
Agreed. 100% agreed. I mean, go for fun, optional. It's a great time. I went.
Social.
Let me be contrarian because I do have two of them actually. No, I think they need to go to college not to learn a topic, to learn. Does that make sense? And I think they put them in any situation where they can use their judgment. Doesn't matter what. If it could be as boring as computer programming, as exciting as art. But if they can't use their judgment, they'll be useless in 5 years' time frame. Because judgment was the thing that has always been scarce, but with low leverage. If you're a person with good judgment, you used to have 50 people, 5,000 people to apply that judgment to something come out of it. Not all of those 5,000 are automated. But it doesn't mean judgment has become more abundant. It's still scarce, but has much more leverage now. So learn to apply judgment, because that's still scarce, but it will have 10,000 times more leverage.
Yeah, I agree with that. I don't think you need to pay like $60,000 or $100,000 to do that, though. I think that there are definitely many places to learn to use judgment. My advice is jump on NextWork. And start with the problem. Like I really think that it's a problem first. Don't do a degree in biology. Do a degree in solving, how do I want boats to be moving faster in water? Like whatever you're interested in, I think you can start with the problem and work backwards instead of starting with theory and working your way up. Don't wait 3 years to apply your knowledge. That it's been flipped. It's a much cooler world.
Other questions? Yes.
All right, I've heard in the last 24 hours both that Harvard alums and grads can't get jobs, but also it's really hard to hire for your startup. So what's really going on from a startup standpoint in hiring?
I'm going to share what I learned from Brian here, which is have a sonar on at all times and be authentically you. So this is how it applies to us. My co-founder and I are both musicians. We don't need to hire every engineer at Meta. I mean, we literally had the moment where we were reaching out to people at, the fancy tech companies when we've heard the thing, dude, your seed round is my annual comp. Like, this is not a place to compete. But if I see someone, and obviously my agent is doing all of this, if I see someone with reference to music on their LinkedIn, My email to them is like, hey, you play any instruments? People who do are like, yeah, hell yeah, you bet. What's up? I invite them to jam sessions in my house. And I can tell a lot more about whether I can work together with them or not in 15 minutes of us making jazz together than an hour-long colonoscopy interview, which is no fun for either side. So find what is authentically you. Like we have, my new friend who's a captain of the football team. Dude, play pickup soccer. And I think through someone's behavior on the field, you will learn more about whether you can work with them or not, especially in an early stage company. So have a sauna around and be as authentically you as much as possible and find the people that you can jam with. There's no competing against that, regardless of how much comp you offer to people.
But I think the question was, how is it possible that Harvard alums can't get jobs and startups can't get people, right? Is that the question? Yeah, that's because there are a lot of Harvard alums who don't really know how to use AI, actually haven't gone to NextWork. And that is part of the reasons why those people aren't getting jobs. And the people whom startups are looking for, every startup is looking for, right? They're the 10 people that everybody wants, and then you go down that route.
Because judgment is scarce, has been, and will be. Doesn't matter how many people with degrees, very few of them will have good judgment. And people want to hire people with judgment.
Yeah, for my say is, the most uncommon thing in the world today is common sense. So I think if people are applying common sense, I feel they are the right fit for us.
I think that is a beautiful note to end on. Common sense and judgment. I'm still not totally sure what I should do when my 16-year-old tells me he doesn't want to do his math homework because it's useless. But this was great. Bindu, Amber, Masoud, Chiran, Mert, you guys are amazing.
You're amazing.
So proud to have you in our Shakti portfolio. And thanks to all the Titans who are supporting them along the way. Okay, over to you, Liz.
You just watch Shakti founders who are building the future try to describe it. That is a nearly impossible task, and it's not because they lack vision. It's because the greatest inventors in history could never see where their own technologies were heading. General purpose technologies hide their future from the people building them. They always arrive as point solutions to narrow problems. My father, Professor Nathan Rosenberg, spent his life studying this. He had a line, "In hindsight, the future is obviously not obvious." James Watt thought minds. Edison thought light. Kilby and Noyce thought smaller circuits. The ARAPNet team thought file sharing. The world got railroads, electrified factories, the phone in your pocket, and the internet everywhere. That's the pattern. You founders are at the first step. You don't have all the answers. Nobody ever does this early. What comes next is the heavy lifting, diffusion, combinatorial innovation, learning by doing. The technology moves first. Skills, organizations, and capital catch up later. My late Google colleague Luis Barossa gave me a word for it. Roof shots, not moonshots. Quiet wins that compound. Better buses, better recruiting, better recycling, better repairs, better stories, better credentials, better selling. That is what you are building right now. You don't know exactly where it leads. Nobody ever did. That is how general purpose technologies work. Now keep going.
We can safely say that we feel good about the future after seeing our portfolio founders. All right. Happy to welcome to the stage Matt Fleissig, co-founder and CEO of Pathstone, one of the leading family office managers with over 185 billion in assets. That's still the number. Thank you for joining us.
Thanks so much. And as I say, the amount I've learned already this morning is just amazing. So congratulations to everything you've done. I think you're making more Pathstone clients by the minute with what you're doing too.
All right, thank you. I guess that's a great place to start. We just heard from our portfolio founders. In terms of your family offices, how are you giving them access to the future of innovation coming out of Silicon Valley?
Yeah, I mean, I think the first thing is when you invited us, and I never thought that we were going to be like the contrarian guest as we speak about this. Our whole business model has been how do we help give people their preferred lives? And so the amount of wealth that's being generated in the US, specifically for what we're doing here, is just unbelievable. There's 75,000 families in the United States today that have north of $100 million. That doesn't even make sense. That is growing at over 30% a year. And so as you look in the space, you can go to Goldman Sachs, Morgan Stanley, Pathstone, Raymond James. You're going to get a global cap market weighted asset allocation. And in the end, you're going to be fine. The question is how do you get edge? How do you meet firms like Shakti to put up better returns? And I think that's the whole process that you look at, and how do you differentiate? So our little bit of a different approach has always been, because we are potentially doing your estate plan, we have your planes, we've hired your pilots, we are doing your taxes, we do the payroll for your household staff. We actually know what you need in your portfolio, and if you can dream it, that we can do it. So specifically on the venture side, that's an area where we've overweighted because we think we can get edge. And how do you find managers? And everything from our business model, even I'll say from being here today, AI, yes, it's the future, but relationships still matter. And it's this crazy, fascinating world where you create moments that matter, you create introductions, you create networks, and that's how you find the next investments that you're going to invest in.
Have to ask you the same question that we asked Roland earlier, which is what's the most asked about company by your clients that they want to get into?
It's interesting. I guess I'm the internet generation, so I kind of lived starting my life in the workforce during the tech boom. Did almost fail out of college creating software that auto-confirmed IPOs on E-Trade, but we'll put that off to the side. And you're kind of seeing this again as well. So, there used to be different cocktail talk, but obviously SpaceX, Anthropic, Anduril, obviously with everything that you've been seeing going on in Ukraine, is hot. And so I think it goes back to this relationship factor. Laura Andron, who's here, she can wave, leads our private equity and venture efforts at Pathstone. We have relationships with GPs that date back over 20 years. And so there's a certain subset of venture firms that you just can't access. And so it's not only that you can't access them, then when there's different investments, and you'll remember who you're early, you did it today, thank you to our Fund 1 investors. And by gaining that access and finding firms who have that access, same reason why Goldman Sachs bought the secondary business that you heard earlier, it's how you get access for clients to get edge in a world where investments candidly have been completely commoditized. And so, SpaceX obviously comes top of the list. The number of emails our clients forward us every day of getting offers, and obviously you see Forge and Hive and other companies that are spooling up to offer those. Anthropic, OpenAI, and I'll just give you the flavor on that. So we oversee about $200 billion. Through relationships that Laura had, we got offered access to co-invest in, we did a special purpose vehicle to co-invest in Anthropic and OpenAI. We had 4 days to reach out to our 850 clients to see what interest was there. In 4 days, we raised $244 million of client capital for that demand. That investment's up about 4x. And so back to your point, you have the demand, you have what people want, and then on the same side, how do we proactively offer that access? We were early investors in a firm called Sands Capital. That is a late-stage venture investment fund. And they gave us access to Anduril back when it was a $12 billion valuation, which is a drone defense company. And so I think a lot of it that we've seen is, yes, there's all these services that Pathstone does. Yes, we've delivered goats to people. That's a true story. But at the same time, how do we are able to offer this access that gives you edge in a completely commoditized investment world?
Well, I think we all want to hear the GOAT story after this during lunch. We've heard a lot about, Matt, the generational transfer of wealth and how this is the biggest transfer, coming up with the biggest generational transfer ever, with $84 trillion being handed down. How is that playing out so far? Are existing clients bringing their kids in already? Or give us a window into what you're seeing with your family offices.
I think the generational transfer, you're going to laugh at me, I think is boring. And I said earlier, there's 75,000 families that have north of $100 million. The wealth that's being created, yes. Does Pathstone have 8-generation families that are out there? Sure. Do we already work with their kids and their grandkids? Absolutely. When someone passes, do we settle the estate? Yes. I think the more fascinating thing is the pace at which, so forget 100 million, there's 300,000 families in the US alone. By the way, the concentration is majority, not majority, but New York and San Fran, as you would expect. That is also growing at almost 40% a year. So if you just do the math on that, yes, the generational transfer and there's advisors and money in motion, yes. It's the wealth that you're seeing created. Think of the founders that were here today. By the way, I do love DoorDash more than anything in the world. I'll put that off to the side. But you look at that, and so I go back, there's 300,000 families with north of 30 million. Year prior, there were 226,000. Year prior, there were 180,000. The level of wealth that is being generated in this country, forget globally, is just so off the hook that it's this, you concentrate to create wealth and then you diversify. And as you're diversifying, what do you invest to continue to earn returns?
And given the growth in family offices, and we have folks here who are probably in the process of starting family offices, what's kind of like the 1 to 2 things that you advise someone who's just starting out building their family office?
I was going to joke and say, don't do it.
Or building your family office with a Pathstone.
I was going to joke, say you should hire Pathstone. When I first started out in the industry, so I randomly met 20 years ago the family who invented the powder-free latex glove during the AIDS crisis. So anytime you see a purple or a turquoise glove, that's actually the first family of Pathstone. Goldman Sachs actually did the deal when they went public. And so you look at this, and at the time when I met him, if you had $100 million, you would create yourself a single family office. And you would hire folks internally, they would cost more. It's a little bit of a weird job because there's no equity, you have one client, they get mad at you, you become isolated, you don't have access to technology. Fast forward 20 years later, I would say if you have less than $2 billion, it's really hard to justify trying to staff up a chief investment officer that you'll have to pay north of $1 million, et cetera, et cetera, et cetera, and then they become isolated. The other massive thing, maybe we can solve this today, is there is no technology to help serve centimillionaire plus families where you need things on the investment side, along with a general ledger accounting system, along with access to all of these different things. And yes, we could probably vibe code this by the end of the day, and we're spending a lot of money trying to do this. But there isn't technology, and then you have to staff people. Someone quits, how do you replace them? So what we're seeing is an extremely large amount of outsourcing as a trend. Of course, on the investment side, but we pick up paying bills for clients, collecting mail. Again, all of these things that are outside of this high level of service that's there. And so it's very hard to build and maintain. The other largest trend we're seeing is first generation, and these are some of like the Industrial Revolution, like first generation family offices. The next generation do not want them. And it's just too much responsibility. There's no technology, so they outsource things, accounting, tax, bill pay, performance reporting. Think about your holdings that you might have. You might have 300 private equity investments. How do you track them? And there's a couple pieces of software out there, but then you have to staff them, et cetera. So I would just say, unless you're at that size, and I'll give you a live case study. There's a family in Dallas that we work with. They were spending $4 million, $2.5 billion single family office. And there's other firms like Pathstone. I do think we're very unique on the level of services we provide. But the cost was more around $2.1 million to outsource, almost like the NetJets fractionalization of family offices. So I think it's cheaper, more successful. But above $2 billion, if you want more control and you're going to have a 30, 40 person office, makes sense. Still have a technology issue that for some reason just hasn't been solved. And candidly, I think the market is just not large enough to fund that.
Interesting. Curious about generally client preferences toward venture. I think going back to the original history of venture, it was a lot of large family offices who were seeding innovative companies. And then a lot of the asset managers and pensions and endowments came in and almost crowded them out a little bit. It feels like family offices are almost having a seat at the table again, and there's definitely interest in some of these single names. What are you seeing in terms of the return of the family office capital to venture?
So the first thing is the the returns in private equity over the last 3 to almost 5 years have been challenged since 2021. And a lot of it, obviously the S&P has been ripping, global indices have been out-earning private investments. I will say over 10-year periods, there's still no better asset class than the private equity space, even with the returns that you've seen. So I think you've had a confluence of the institutions are a little bit oversubscribed, fundraising has been very challenged, and even though institutions are supposed to be this multi-generational money with long outlooks, you have these investment committees that almost act like retail investors. And the family office money is actually much more patient capital. It's much more reliable. And so there's this fascinating shift. I think you've really seen it in the last 4 years, especially with the level of wealth that's being generated, that family office capital becomes a little bit more reliable and is accessible in the private markets.
I'm going to come to the audience in a minute for questions, but you mentioned in terms of patient capital, as Keval mentioned, companies are staying private much longer. It's no longer 4 to 6 years, it's 10 to 12. Family offices are patient, but how are they thinking about liquidity?
I think that's the part where if managed correctly, that's where if you have a multi-generational portfolio with multi-generational wealth, liquidity becomes less important. We spend a tremendous amount of time around creating liquidity waterfalls. Our clients are typically probably close to 30% liquid because they can access investments that other people can't. I think there's always been this idea, it's like, why should private markets, why should venture cap, why invest in that unless you're going to get a premium over liquid markets? And so again, on the longer term numbers, 10 years, 15 years, it's not even close. You're still getting anywhere between 3 to 5% better per year finding investments in the private markets, but that's where the search, I'll say, still continues to be this day.
Great. We'll pause there, see if there's any questions from the audience.
What percent return do you think the monies that you have should have? What percent return should you generate each year over long periods of time?
Tell me what you're looking to do, but I still think in the range of, if you're having a responsible portfolio in the 7 to 10% range is something that you can look for, continue to this environment. And then it depends how aggressive that you want to get from there and what you're trying to accomplish. I mean, I look at, again, we have clients who meet all over the spectrum who, again, who are in 50% in private markets. Some folks don't want anything in Europe or Asia, and it really goes across the board, and we create custom solutions to do that. So I would say, tell me how much risk you want to take, and I'll tell you how much money we can try to make you. And the other part that's interesting is the higher the burn rate, the more aggressive that you have to be. And to your question, I think the most interesting, a lot of the times people come to you and they come to you with their situation. And again, because we're paying your bills, we did your estate plan, we know how to actually invest. It's this interesting part to say that this doesn't work. And I don't think clients are used to hearing that what you're trying to do is not going to work based on your cash and burn and compare that to return expectations that you need to maintain your wealth.
Great. Today, Matt, is all about looking ahead. And do you think when we are sitting here in 2030 and you're coming back to talk to us at the annual meeting, will venture be a greater part of portfolios of the family offices or less?
I think it's going to continue to get greater and greater and greater. Pathstone today, venture, early stage venture probably makes up about 10% of our private equity portfolios. Mid and late stage venture is in another 20 to 30%, you're about 40%. The biggest issue is access. How do you access venture managers at different bite sizes? There is this movement that we're seeing, which is incredibly fascinating, around creating access to lower high net worth investors into the private markets and venture markets. There's a firm called Hamilton Lane. There's actually a firm called Jasper Ridge, which is in an office a little bit over there, that they've started creating actually 40 Act mutual funds that access private equity. The Hamilton Lane product, this blows my mind, has $8.5 billion in it. There's things called interval funds. I'll just say do not buy them. If you're in them, I'm sorry. And don't get liquidity when they offer you a window, because that creates an issue, and then that'll be in the news, like private credit. But put that off to the side. I'll just say it's something that will continue to proliferate. Structured products, you started to see that as well. That was where you would group derivatives together. Those you can now buy in bite sizes of $1,000. It used to be a $3 million minimum. So I think you're going to see more and more access to the private markets through liquid vehicles over time. Right now, a lot of those liquid vehicles, they're really subpar investments that are in the underlying, but that is going to continue as we push forward, which will allow people to have more access to venture, private equity, et cetera.
Great. And we talked, you mentioned all the companies earlier that your clients want access into. Just curious if you have a take on, outside of SpaceX, which AI company do you think will go public next?
I struggle about, like, why do you go public, right? And I'll use Pathstone. We are ourselves, I sit in an interesting seat where we are a private equity-backed firm. We've had 3 rounds of private equity come through Pathstone. At our valuation, in theory, you could go public, but why? And do you need massive liquidity? Do shareholders? Do you need injections of capital that the private markets can't inject? But look at the OpenAI transaction. You said it. In Q1 of this year, OpenAI did a $122 billion raise. If you pause on that for a second, Disney's market cap is about $100 billion. Verizon, I'm making up numbers. Boeing's like 130, 140. I'm going to pay for this later from Laura. So they raised more money than Boeing and Disney of their market caps, and they're not public. So at some point, I agree, and there's some California stuff I think that has to get worked through. But until the question is why, but SpaceX in my mind is the one that goes public first because Elon wants to. And then you have public reporting. I loved your question about transparency. The second you go public, the world changed. You wanted to invest, I'll use Pathstone as a great example. We're going to invest $5 million in our infrastructure this year and $2 million in digital. I don't have anyone to answer to other than the LPs, the LPAC committees that are investing to us, and our investors. Second you're public, the world completely changes. So I think it's really around liquidity, might be ego in some places, but I think you can keep staying private for longer, and I think you're going to see that trend where you have these companies that almost feel like they're a public company, but they have private and have to release limited information.
All right, we probably have time for maybe one question. Not. We will leave it there. Was there one over here? Oh, go ahead.
What is you have for people who are not quite at the family office level but need access, as you said? We heard about secondary markets today. I was just curious.
Yeah, I think there's a lot of options out there. The part that I think has been so fascinating is there was this rise of, I'll call it, these robo-advisors or AI-based advisors. ChatGPT, there was our regulator is called the SEC. ChatGPT is now believed to be the largest investment advisor in the world. And so I think you're going to see there's firms out there like Betterment and others that take on smaller amounts, but I think you're going to see this rise. The $100 million plus market that we are in, I'm not going to compare us to a doctor when you get a diagnosis and you want to know where to go and what to do. But I think you can get some incredible advice and analysis through Claude and ChatGPT, et cetera, that companies are going to start popping up pretty quickly that can give very high levels of advice without necessarily human interaction, unless there's places where people want that human interaction in certain professions and advice.
All right. Oh, one more question.
So you talked a lot about, supporting family offices. You talked a lot about, generational divides, but you didn't talk at all about philanthropy as it relates to family offices and the generational divides. I'm curious what you're seeing, one, in terms of their philanthropic needs and how you advise them, and two, as the wealth gets transferred, we're seeing the largest wealth transfer that's also coming into the world of philanthropy that has been so, many ways, radicalized by different generations.
Yeah, it's something I'll just say I'm very proud of. If you look at our clientele, and sometimes you say, okay, it's $100 million plus families, these are titans of American industries. These are people who have created more jobs for our country than can even be counted. And then the impact that they have on society after that and during that is a lot of work that we do. So we have full-time people around education and governance, philanthropy, negotiating grants, making suggestions. So it's as you start going down the holistic things that we do, we don't just buy private jets, which is fun, by the way. but it's also a lot of work of these marquee American families that have changed the course of where our country has gone and changing the course of where we're seeing on the philanthropic side as well. So that's a very rewarding part of what we get to do.
All right, with that, we'll wrap it. Matt, thank you so much for your time and for coming to our annual meeting, and look forward to maybe in a few years hearing how family offices are allocating to venture. So thank you so much. And with that, we will, actually that's a perfect segue, Tina, to our next conversation with Jesse on AI in society, and hearing about how AI is changing the way that we learn and other skills. So.
Hi guys, Jessie here, back again, and I am thrilled to be here with OC Imeokparia, who is the CEO of Code with Klossy, a nonprofit that's tackling the gender gap. And that's what we're going to talk about today. We're really excited about all the things that AI is doing for the world, but we're also aware that there are some pretty significant societal impacts. So thanks for being here.
Of course. Is my mic on? Yes. Can you hear me? Yes. Amazing.
Cool. I want to just kick off to frame this conversation with two stats, which you may or may not find surprising. In 1984, 37% of CS degrees went to women, and today it's around 20. Stat number one. So there's a gender gap in tech. I think everybody's probably aware of that, and there have been a lot of efforts to tackle it with varying degrees of success. And now we have another one emerging. A Harvard analysis of 143 people across 25 countries found that women are adopting AI tools at 25% lower rate than men. So tell us about Code with Klossy. How should we be thinking about the gender gap that is emerging? And let's get into it.
Yes, let's do. So as Jesse mentioned, I work at an organization called Code with Klossy. We were founded in 2015 by supermodel and entrepreneur Karlie Kloss, hence the Klossy. We are an organization that supports young women from curiosity through career, from age 13 to 26, as they make their pathway into technology roles and careers. And we provide technical skill building and peer support over that time. And so much like the Shakti flywheel, we invest long-term. That investment compounds over the years that those young people are seeking that pathway across career and education milestones.
Such a cool organization. It's impacted so many. Yeah. So talk to us a little bit about, so you're literally, the name of your organization is Code with Klossy.
Yes.
And we've seen Keval showed some interesting statistics about what are the coding jobs all really going away.
Yeah.
But AI is certainly changing the way we're thinking about coding as a skill. So when ChatGPT made the scene, was it and all this sort of everyone started using AI for coding. Was it like Panic at the Disco? Or were you guys
we were certainly cognizant of the landscape. So as I mentioned, Code with Klossy was founded in 2015, which was a very different time. If you recall, that was when organizations like Code.org were founded, Girls Who Code was also founded. That was a time when the conversation was around coding as a vocational pathway. And if you code, it equals jobs, it equals the future and success. Fast forward to today, that is obviously not true. We haven't changed our name, but that is obviously not true. And so what we think about is the lessons we've learned over the last 10 years have really instructed us that what our young people get from our programming is not learning to code and the understanding of syntax. They're actually learning computational thinking and code sense and technical fluency. And so while code is in the name, the skills that are actually being developed are quite different and are really the skills that we think are still transferable and applicable today. So even if you are using a coding agent to produce volumes of code that would have been unthinkable 10 years ago, the understanding of architecture, the understanding of systems design, the judgment and the common sense that you learn from understanding these patterns are still relevant and are still skills that need to be built. And so far, we have not found a better way to teach those skills than to have reps in learning to code some of these basic functionalities. That is not to say that we haven't evolved our programming. So just 2 weeks ago, we launched our AI Build Lab, which is teaching our young people how to use tools like Codex to do agentic coding. So the programming has certainly evolved, but the fundamentals of what you learn when you are writing code, that code sense, that computational thinking are still, we believe, fundamental skills that are still required in the new world.
We've been talking and leading up to this, and you've shared a couple of really interesting other things that you have discovered that factor into this gender gap. Can you tell us a little bit about what you've learned and how you're tackling it?
Sure. So, it's both things that I have learned and things that I have lived. So I was an undergraduate at Stanford. I got a computer science minor. I have never written a line of production code in my life. But the skills that I learned from that helped me be, I would say, a very excellent product manager and have a successful tech career. And so that lived experience combined with what we see in our work is that when we think about what are the real barriers that are preventing us from closing this gender gap that we've been all talking about for 30, 40 years in a very tiresome way, what are we missing? We're clearly diagnosing the root cause in a way that hasn't enabled us to find the unlock. And for me, again, when I reflect on experience and I reflect on what we see, the issue is culture as much as it is access. It's culture as much as it is ambition. It's culture as it is much this idea of entrepreneurialism and treating entrepreneurialism as a skill as opposed to a job. And so when we think about why are we still talking about this problem 30, 40 years later, it's because we're not talking about culture as much as we should be, and we're not teaching and leaning into entrepreneurial skills as part of the problem that needs to be tackled alongside it. And so it's a both and. We both need to think about the culture and the systems in which young people are being, are operating and building their careers, but also, do we have a complete picture of the right skills that are necessary for success?
So let's touch on both of those, and let's start with the entrepreneurship piece. We just had another conversation with these amazing entrepreneurs, and you heard Chiran say, "I just thought, why not me?" I hear lots of other stories of kids that were like selling
lemonade stands.
Yeah, lemonade stands. And you think to yourself, well, it's just innate. Like you just either have it or you don't. That entrepreneurial drive. You disagree?
Yeah, I disagree. Again, I think part of what, I come to this with a lived experience. So I see Steph Hannon in the audience. At Stanford, we were part of a program called the Mayfield's Fellow Program. And that, for me, was the first exposure I had to entrepreneurship as a skill, as opposed to it as a job. And by that, I mean, it is a set of things, whether it's an understanding of how to take intelligent risk, an understanding of how to negotiate, how to read people, how to assess opportunity. These are all things that can be learned with practice. And again, I have lived that experience, so I know it to be true. And I think what we need to provide and what we hope to provide in our programs is a high impact, low stakes way for young people to get reps at practicing those skills. And I think that's what's missing, is the reps to say, it's okay if I fail. This is an environment where I can learn from that failure and get another shot on goal to practice those skills again. And so I think that's what's missing, is an environment for continuous learning and practice of these skills. I often joke, you don't like watch a video of Michael Jordan playing a basketball game and then go out and pretend like you're going to be Michael Jordan the next day. You practice. You go to the gym, you shoot from free throws, and I think we've missed this leap from knowledge to excellence. Between there is practice. And that's what we try to provide in our programming, is the ability to practice both the technical skills, but again, these entrepreneurial skills that we think are foundational.
Break it, give me an example. How do you practice entrepreneurship?
So for us, it means that everything we do is project-based. learning, right? So much like Amber at NextWork, we believe that building things and doing things is the best way to have proof of mastery or proof of skill. And so every program we do has some sort of outcome. And pretty much every program we do, you have to present that outcome. So you have to present and practice influential communication. You have to decide and have judgment about what my MVP should be if I have a fixed amount of time to get something done. And so again, we are baking into the educational pedagogy this idea of producing something that has an outcome that you then have to defend or scope or make judgment calls about, and that is just reps you get every time you participate. Yeah.
That makes a lot of sense. Let's shift to the culture piece. So again, we have entrepreneurs in the room who are building companies, and we know that a big part of that is building culture. We were both at Google, where culture played a big role. And you've talked about this cultural issue in terms of closing the gender gap. Unpack it.
Unpack it. So what I would say is a thing that, is not novel, but is worth repeating, that culture is not the free lunch and the foosball table and the whatever. It is how things get done. It is process, practice, and procedure. And so thoughtfully building those things produces a set of outcomes based on incentives and rewards for how you treat the people in your organization. And so I think part of what we see when we think about culture being a barrier to advancement is how people are evaluated in performance reviews. Men tend to be, again, this is not absolutes, tend to be evaluated based on their potential. Women tend to be evaluated based on their performance. So imagine you're an early career employee, 1 year out of school, you don't have a track record of performance. So as a woman, that can be difficult, right? Because you're not being evaluated like your male counterpart on your potential. You're being evaluated based on a track record that you don't have. So again, these are things that you can then say, okay, well, if you know that to be true, how am I designing my performance review process to account for that? And to adjust in ways and to create signals or parts of the rubric, et cetera, that help to make sure that everybody is being evaluated partially on potential and partially on performance, if that is your preference. So there are intentional designs that you can make, again, to your process and practice and policies, AKA your culture, that help to overcome some of these boundaries.
Yeah, that makes a lot of sense. I want to return to this stat about women adopting AI tools at a 25% lower rate than men. There's been a lot of interesting studies about that, and I'd love to get your take on why that is the case. Yes.
Culture. So I say that jokingly, but it's true, right? So we think about the dual culture problem. So it's not just sort of workplace culture, which again, as I said, is sort of process, practice, procedure. But there's just also sort of the zeitgeist, right? What culture and media and stories do to shape your sense of your possibility, your sort of sense of the self-talk that you have, your sense of what permission you have to participate in things. And so I think today we still have a culture, sort of a pop culture, that tells a set of stories to young women that impact their ability to say, yes, I belong in AI, yes, I can try, yes, I can fail, yes, yes, right? So I think that this dual culture problem is still one that is part, to me, the root cause of why these sort of gender issues continue to be so intractable, is that we have to sort of fight both fronts of the culture war. But I would say that what we see, for instance, both in our organization and through some of the research you show, just even things like when women use AI in the workplace, there have been studies that show that their colleagues, both their male and their female colleagues, use it as an indicator that they're not as expert in the thing that they're doing, which is crazy, right? Because on the one hand, we're saying use it, and on the other hand, again, both their male and their female colleagues are saying it's an indicator that they just don't know as much as they should. And so again, the narrative stories are just as impactful as the structural barriers in culture. And I think that we're seeing a lot of that play out in the AI world. One other stat I'll give is, I think everybody here is familiar with the company Lovable. So they're an incredible vibe coding tool. Basically free, easy to use. Their logos are pink and purple. You'd think that would be like, yes. But they have found that approximately 80% of their users are still men, right? So it's freely accessible broadly. What is stopping women? And again, it's not that it's not free. These aren't the things that are the blockers. Again, it's a narrative. It's a sense of possibility. It's a sense of belief. And I think it's, again, creating the cultural narratives that help us overcome the self-talk that we're sort of socialized to have, whether we like to say that or not.
I want to open it up for a question or two. No, I do not want to open it up for a question or two. Talk to OC at lunch.
I could talk about this all day.
We need to wrap it up. I would like to close, though, with a question and a request for perhaps a story. Is it working? And can you tell us about a woman, a girl that has gone through your program and that is breaking through this, gender barrier?
Yeah, well, I would hope it's working. So again, the organization was started 10 years ago. I joined 3 years ago. But what I saw, and one of the reasons why I wanted to join the organization is with my product manager's hat on, I saw an organization that had high retention rates, high repeat use year over year, and a sense of, again, that flywheel of compounding effects. So an example, there was a young woman named Ronnie, Veronica now, because she's a grown-up. When we met her in 2017, when she was 14, she went by Ronnie. She took a program with us. She then came back the next year to take more programming. The third year, she was age eligible to be what we call an instructor assistant, which is a near-peer leader who comes back and helps to teach the course that they took in prior years. She did that for 7 times. She was an instructor assistant. She then went on to intern for Code with Klossy. She then is now a first-year software engineer at Amazon. So this is sort of the cycle. Since 2017 to now, we've seen this young person grow, both in their technical skill and, again, in those sort of adaptive human workforce, whatever term we're using today to talk about those sort of intangible skills, the judgment, the common sense, et cetera. And now she's in the workforce. And we will continue to support her to and through her first promotion to manager, because again, for us, the metric of success is retention in industry. But that's the story we have over 12,000 young people in our program today. And so we hope to see more Ronnies, and we are seeing more Ronnies, so we think it's working.
That's excellent.
Yeah.
Congratulations. Thanks for the great work that you are doing. Thank you for being here with all of us today. And let's all take some learnings and help to make sure that this AI is empowering and turbocharging for everyone.
Amazing. Thank you.
Thanks, OC.
We have 2 more panels between you and lunch, so we're going to get you there as soon as we can. But these are amazing conversations that you don't want to miss. So let's get into it. Laura Kinder is here, and here's your mic.
Thank you.
Like many of our other speakers, you come from far, from New York, with Matt and Roland. Welcome.
Thank you for having me.
We've talked a lot about the tech stack and how AI is changing the way people are building products, but the organizational stack is also changing. And Laura is the president of Daversa. Daversa, everybody in this room knows who Daversa is, but and you can tell more. But Daversa has been an organization that I've known for almost 30 plus years, and they build companies. Every company that we've talked about today, all the big ones, small ones, they are behind all of those iconic companies in terms of building their management teams. So, Laura, tell us about how company building has changed in the age of AI.
Yeah, I think, well, first of all, thank you for having me here. It's been amazing just to see so many faces. I finally got to meet OC in person after I have stalked her a number of years and see some old clients, and this is just such a great event. But yeah, maybe just like to give you some context, I've been with the firm for 2 decades. We do somewhere between 900 and 1,200 searches a year as a firm, and that is across the entire ecosystem of tech companies, with the majority really being between that series like B and C, although we're seeing a lot of A's with these massive, fundraising rounds that we're seeing. And then, we're also seeing more public company work, as a lot of companies are trying to figure out how are they pivoting and adapting in this next, era of AI. So we see a lot. And in some ways, I, think just like a venture fund, that we're a prediction market, like we're kind of the Poly market or the Kalshi of the industry and where things are going and where things are shifting. And to answer your question, I think hiring's changed dramatically. I think that the playbook that I knew for probably 18 years got completely erased. I think that we use this metaphor inside of the firm, which I will try to do a good job of explaining to all of you. But, think about like the tech ecosystem like the ocean, right? So, at the bottom, you used to have the seed and the Series A's. They were the lobsters and the crabs. And then you kind of had your B's and your C's. And then you had, the big public guys. And typically, from a talent perspective, people used to stay somewhat in their ecosystem, right? You might have been with a Google, and then you might have said, you know what, I'm going to go down, I want to go start a company. But you typically found people that were very much, they weren't always stage agnostic. They actually were very purposeful about when they come in and where they think that they are going to have an impact. What we've seen now is absolute chaos. And I think all of you are probably seeing that chaos in the sense that you have seeds being, these researchers getting over $1 billion in seed funding. You have, we talked about, the current Cursor and Elon and, that company, and the way you have Cursor that was sucking up talent, and Anthropic and OpenAI. And so the ecosystem has just changed so dramatically. And candidates are no longer saying, I'm a VP of engineering that's really great at managing a team of 150 plus. They're saying, you know what, like, maybe I'll go be an IC at Anthropic, or maybe I'll go manage a very small team at OpenAI. And so the competition is like definitely the most intense I've ever seen in my entire career.
So let's pick up on that. You talked about, let's say, VP of engineering. The skill set that companies were asking you to look for, let's say 3-4 years ago, has that changed when somebody comes to you now to get help on hiring a CTO or a VP of engineering? What's the skill set now versus before?
Yeah, so I'd say in prior years, you were really looking at the team size, and every company was going to say, my engineering team is 25, we're going to go to 75, and there was this like headcount growth, and you were looking at more about, okay, your Series B, what you need now is you need someone who's going to think more about like systems and processes and, how to implement them. And now that's all wiped out. I no longer hear these massive headcount, incremental increases. I don't hear companies talk about that. I hear about, we need someone with agency. We need someone who can be very technical. So I think in particular with, I spend a lot of my time in engineering and product. So that's kind of the lens of where I, my conversation here. But they want engineering leaders to be far more technical. They want them to have a lot more. Obviously, everyone now wants someone who can have that AI fluency or has been through that transformation. The problem is that there's so many companies that are still in motion on that transformation. So yeah, it's organizations, I think, as we've all seen, they're much flatter. That hierarchy, that whole ladder of hierarchy has been, ripped out, and now the teams are much more lean and agile than we've ever seen before.
So how do you suss for AI fluency when you're screening candidates? Are there different tests or different conversations you're having?
Yeah, I kind of we've actually I'm obviously not an engineer, but I will spend a lot of time with them about how are they thinking about AI and what have they done? How are they building within the organization? We've been building a lot of our, own kind of coding our own AI and building a lot of it internally at the firm. And so, I had about a dozen meetings this week in San Francisco with, everyone from, leaders at Databricks and other, kind of a whole range of, different companies that are just friends. And I've been asking them, like, what are you building and what are you doing? And so it's really more about the curiosity. Are they like doing this at home? Do they, most of these engineers will have their own agents running and they'll tell you about the wrappers they're using and but then systematically, how are they implementing it and how are they enforcing it throughout the organization?
Do you see the organizational design itself changing? That is engineering and product management and design blurring? Are you seeing people asking you to hire a single executive for those three functions?
Yeah, it's funny because you asked me this question in September and I told you no, but you were right. It's, I'm seeing, so we were at an event, was it September? And I think you had said you were seeing a merge. At that point, or you were predicting a merge. I had just started seeing that, but the answer is yes. We're seeing engineering and product collapse. So we're seeing more combined CPTO or, head of product and technology searches, especially as you're looking at these agentic workflows with engineering and then, from the, but I do think we're seeing a lot more on the product side as well.
Is there a role that you have hired for, a title that you haven't seen before, first time?
Yeah, well, obviously we've been seeing a lot of head of AI. So we brought in Daniel Danker, we placed at Walmart as their head of AI and transformation. He was a product leader at Instacart. So we're seeing that head of AI title with a number of large, could be public, could be, growth stage companies that maybe have a little bit more of a legacy technology to them.
What does that mean? What does that head of AI role mean? How do you define
really thinking about how are they going into their systems, how are they redefining both their internal systems with AI, and then how are they also redefining their product offering out to customers with, AI.
And sorry, go ahead.
No, go ahead.
And does that role report into the CEO directly, or is it under engineering, or where does it sit?
I think a lot of them are reporting to the CEO because of the importance of it. Yeah, so we're seeing, certainly if you want a big executive in that's not always the case, but we're seeing that now really moving up into that executive function. The other roles that, I can't say I didn't see them before, but I think the volume and the clip in which we're seeing them now is it's staggering. I think I did one CIO search in 2007, and it was you didn't do those searches. It was those are the sleepy people that are they're just implementing systems. There's really nothing exciting. But now that job, the past I'd say 2 years has been in a dramatic spike, where as every company is figuring out, okay, 20 different people are trying out 100 different tools, AI tools in the company. We need to have some organization around it. What are we custom building versus what are we, how are we, using Claude? How are we, building our own platforms? That has been a very high demand role. So if you're, I was with the CIO candidate the other day and I was joking around. I was like, how many phone calls have you been getting? It's more than ever because no one knows and everyone's trying to figure it out. And I think that role is also shifting. I think that, what that role is going to look like is very different. And then CISO and security has been another one that the first one I did was probably 2 years ago when we did the CISO search for OpenAI. And I think before that I hadn't really done a CISO search. And now we probably have done 25 of them in the past year, just as every company is thinking about threat and AI and that aspect.
Yeah. When you do these searches, CISO, maybe not CISO, but let's say the head of AI or the CIO, are you looking at different skill sets now or different resumes than before?
Yeah, in the past it used to be so much more about management. And the teams that they've built, we don't talk about that anymore. We talk about AI fluency, adaptability, technical depth, curiosity there. And it is so rare that I have a client come back to me and say, that person's like, unfortunately managed 200 people too little. It's really much more about that, that agency and that, technical depth. And so that's really changed.
What about compensation? Secondary, we talked about that earlier. People have a lot more liquidity now before the IPO. How are things changing in terms of compensation?
Compensation's gotten out of control. And I think what's happening, there's a multitude of factors, which is, in Q1, I don't remember the number, but we had, more money than ever in the history that's flown into venture, right? So what happens is, more companies, more funding. We're at the part of the food chain that, when companies are getting funded, they're growing, they're hiring, we get called. But because of the competition in the market, and even things like, for those of you out there that are entrepreneurs of a company, maybe a Series A, Series B company, you might think like, oh, well, the fact that, Meta is, is trying to get this research scientist for, I don't know, like, $40 million a year, $50 million a year, that's actually kind of light. That doesn't affect me, but it does, because what happens is that it's like, then that person's direct report gets called, then that person's direct reports get called, and there's this entire feeding frenzy. And what happens is it's pulling everything up. And so I think that the days of like, I'm a Series B company and I'm going to pay this person, $225,000, which I feel like that's been the compensation for literally the 20 years that I've been doing this, plus 1% equity. You're not going to get someone great for that. So the comp, especially since January of this year, it has really increased with the demand. So there's just more activity in the water. I also think that a lot of founders are still, they haven't building the reflexes on, we saw the market do a pretty steep downturn in 21 into 22. Compensations kind of fell, we saw a lot of layoffs. I think there still is a little bit of hangover from that with some founders. And so I think, I spend a lot of time upfront with companies saying, okay, like, whatever you are seeing in this Compensia report is not relevant anymore. Let me tell you what I've been seeing for the past 3 months. Even my data from January isn't even that much relevant anymore, given how fast these things are outpacing.
So what should founders of startups do? How do they compete for talent in this age?
Yeah, listen, you can't compete financially against a Anthropic who's gonna offer, someone, $1 million on a starting salary. You can't compete against Meta and all of those. But I think where you do compete is really talking about your vision and your story and your value proposition and why you are going to win in an incredibly compelling way, and like out-recruiting that set. So knowing that compensation-wise, no, you can't compete with the Mag 7. You just can't. But what you can do is you can go to that person's house and you can sit in their living room. You can maybe give them a larger portion of equity than you think, maybe a little bit out of your comfort zone. You can really talk about, the competitive moat. I think candidates are also, they're really smart right now. And I think, because I think so many people got burned, with these massive valuations that happened in, 21 into 22 that then, collapsed. I think that candidates are now doing a lot more due diligence on the company than I've seen before. And so if there's a deal that they don't feel like has a real moat to it, defensibility, if it's a platform, they're like, well, Anthropic's gonna build that like next week and release it. Look what we saw with Figma. It creates a lot of uncertainty with candidates. And so I think it's really important for you to make sure you're articulating your moat and your defensibility, why you're going to win, and then to just out-recruit that person from a relationship perspective. Even maybe betting on someone who's more of an up-and-comer. focusing on the slope versus where they've been, I think is really critical to get that talent right now.
So let's flip that on its head. So that's the advice for founders. What's the advice for someone like Marco, who's graduating from Berkeley with a great degree in mechanical engineering? He's looking for jobs. How should Marco present himself to it in a competitive
It's funny,
world like this?
I have a nephew who just graduated with a mechanical engineering degree, and
Marco, turn the camera.
I built an entire playbook for him yesterday on what to do. I think you need to be creative and not just apply to a job board. And I think that you need to, first of all, talk about the tangible things, like kind of what Osi was talking about. Talk about the tangible things that you have built and you have done and the impact that you've had. And then I think that you need to not only send your, find the opportunity and maybe send your resume to the whatever black box you're sending it to, but then figure out now with AI, it's amazing the tools we have, who are 2 or 3 of the likely hiring managers. Figure out their email addresses, reach out to them, email the CEO. Be bold. And yeah, I get it. You're probably not, maybe you're not emailing Elon Musk, but I would commend you if you did.
Especially for mechanical engineering, definitely.
Yeah.
SpaceX is going public, my friend.
So I think that, and I think be creative with your research. Look at go figure out and track where is the money going in venture. I have a list of 200 companies I just gave my nephew, so I can give it to you. But thinking about defense tech is. That funding is outpacing, right? You look at all of the energy, the compute, the manufacturing, the next gen, all of that, and then be creative and aggressively go after it and figure out how to get yourself into the room. I think is how you'll stand out. So.
Yeah, that's kind of what happened. They didn't do it in a way that you look at these websites online and you see applications and it's 100, 200, 300 people apply. You apply and then it's okay, I know my resume is not going to get looked at. All you do is I go on LinkedIn, find people I have second connections with, find that way.
Can I get an intro?
Maybe sees the resume and then hopefully send out your resume another time.
Well, and you come here so you can meet Laura.
Yeah.
So that's what you do.
Yeah.
Last question for you. Sorry, go ahead.
What if you would be an extremely skillful and experienced 50-year-old? How would you then think about strategy and finding a job?
So the question's about. Yes, questions, just to repeat the questions, for mid-career executives entering the job market, how do you address that?
Yeah, I think I think it would be a lot of similar advice, but I think it's also going back to showing your AI fluency in areas too. I think what you've built, what you've done there, and again, this is the world that I live in, so it may be a little bit biased, but I think I think organizations are feeling they're having massive rejection from their employees right now, and maybe not in your standard tech organization, but if you're looking at other kind of non-tech organizations where there's a lot of rejection on that, or people are scared to try it. I think that someone that kind of comes with that skill set, which is the new skill set that's going to define the future, I think that's going to be massively valuable.
Last question for you. 10 years out.
Oh, I don't know.
Imagine. It's an imagination there.
Yes.
10 years out, will we have the functional organization that we have today with engineering, product, sales, legal, finance, or will there be something different?
I think that the roles in the leadership is going to be there. I think it's going to collapse. Meaning, I think engineering and product will be one. I think that you used to have a head of brand marketing and a head of growth marketing. I don't think that's 2 roles anymore. You used to have finance and operations. I don't know. I think so I think that you're still having, these very strategic leaders that, you can't take away the person, you can't take away the relationship side of it. But I think there's a lot that you can collapse and condense, where it's going to look more narrow, is my opinion.
Thank you.
Yeah.
Amazing. Thank you so much, Laura.
Absolutely.
We talked a lot about innovation, technology innovation, organizational innovation. All innovations have obstacles, right? There are challenges. And our entrepreneurs face them daily and overcome them. But I think one of the most difficult challenges, if you live in the Bay Area, is to cross the Bay Bridge to come here. And if you live here, you know what I'm talking about. Both of our distinguished guests have done that challenge, overcome this challenge this morning. So thank you for coming. Really, this topic of AI, digital AI, physical AI, there could not be two better stalwarts, industry titans than Shankar and Yuan. Just briefly, Shankar Sastry was the Dean of Engineering at Berkeley for over a decade and has been the professor leading robotics innovation for multiple decades. He's been my mentor for 30 years. And Jan has built some of the most iconic companies in the age of AI and started this discipline before AI was AI. So we're really grateful to have you here.
Thank you.
And Jan, I'll start with you. When you started Databricks with some of your colleagues more than a decade ago, what was the opportunity that you saw then in AI, and what is the opportunity that's still left today?
Yeah, so, it was a great journey. So I think that, when we started Databricks, what we focused on in terms of on data scientists at that time, and basically focus on data scientists who need to process and do analytics and get insights from data at scale. So we focus on cloud deployment, but that was our persona. And then, it was a journey, right? Because initially, actually, we did a lot of, and in the first slides, we talk about AI. At that time was machine learning, and it was kind of the old machine learning, logistic regression, and collaborative filtering, things like that. But we are showing how to scale it. And actually, we started to sell this. What our product, when we had it after some time, we release it. And we see that it's a hosted product, so we see that people use it. We're happy. And then after a few months, we hired a marketing person and say, well, you need to go and get these people to have testimonials, right? To add to our website. So we go there and to start talking with people and say, well, no one is really doing machine learning. And I was saying, why? Because this is what, I thought you bought it for. Well, we didn't have the data. Either we didn't have enough data, the data quality was not there, we need to clean it up and so forth. Now, the luck was, Spark was very good also at data pre-processing and so forth. So that's why we are seeing a lot of people using it, but they're using for something else, and we sold it for. Of course, eventually they clean up the data and so forth, and they started to do more machine learning. But just the lesson here, obviously, like everyone knows, the data is extremely important.
So how do you see that today? Has that data problem been solved? And is that the fundamental reason why we see the AI adoption increasing today? What's really been the unlock?
I think it's everything. Obviously, data plays a very important role, right? It's like that's why people are spending a lot of money to get the data, to get new data. They spend a lot of money to get the data being labeled by experts. And they spend a lot of money creating new data through agentic systems, right? You try to accomplish a task, and then you create a lot of data in the process, and you take the traces with whether the task was successful or not. That's our fed back to train or pre-train, post-train the models. So there is no question. It's like data is extremely important. Of course, architecture and computer are equally important. But you cannot do it without data, because at the end of the day, all these models are still prediction engines, right?
At the core, they predict the next token. Of course, they have a lot of more, maybe, semantics baked in implicitly. But at the end of the day, they are still prediction engines.
If you were a starting company today, and I know your lab is a factory of startups that have done really well, what is the next big thing that you would want to focus on, given the current state and where we're going over the next decade?
Maybe it's hard probably to say very precise, but if you take a step back, you also try to figure out what are the problems out there, right? Because eventually, whatever you start, it has to solve a problem. If you don't solve a problem, if your product doesn't solve a problem, people are not going to buy it. And if you look about all AI, what is AI doing today is that, in general, when you build a product or you solve a problem, there are fundamentally 3 stages. One, you come up with the idea, with specification, whatever, what you want to do, what you want to solve, what product you want to build. Then you build it, and then you evaluate it, right? The problem is solved, whatever the product is going to sell, and so forth. And then there is an iteration until hopefully you get to the desired outcome. So in many cases, what these large language models are doing is it's in some sense, not in the physical world, but in the digital world, they commoditized the second part, coming up with solutions, ideas, and so forth. But this means that the other parts are going to become the bottleneck. Coming up, clear specification, what you want to build, and so forth. And then evaluating that what you build really works as intended, right? It's aligned with your, intentions. That's kind of, it's very hard. So you have to, push. I will try either to try to alleviate the first problem, how you are going to come up with, much more clear specification, formulation of the problem you are going to solve, which is relatively the last one, because if you don't have kind of, say, clear specification, how do you know that something, what you build, what AI build, is going to do what you want it to do? And then kind of evaluation. And the evaluations, there are many, many aspects. One, it's about accuracy. But the other one, it's also about performance, how long it takes to do evaluation. Because that's why, as long as you are remaining in the digital world, you can almost have arbitrary speed up. The moment you are going to hit the physical world, including humans, right, things slow down. Right? For instance, you do drug development. I can give you, I can come up in, 100 kind of things and proposal of new drugs, but you still need to go through clinical trial. You need to wait fundamentally years in order to see whether there are side effects and things like that. So that's kind of once you remove the bottleneck about how to come up with a solution, then it's about how to verify. The same with the programming, right? It's like you can generate very easy right now impressive programs. Now the question, are they going to work? And they are going to deliver, in particular, in use cases which are, high value and so forth. Because at the end of the day, not Anthropic, it's liable if something goes wrong. Mm-hmm. It's you who use the Anthropic are going to be liable. So you better make sure that that is going to work. And the more complex the artifact is generated, the harder it is to say this is really working as you intended.
So let's stick with that. So the next step of LLMs, if I'm hearing you right, I think what you're saying is for coding, because code can be formally specified and verified, we had fast adoption. But if it's drug development or physical AI, autonomous trucking, the AI adoption may not be as fast?
It won't be, it's going to be fast, but things will not move as fast as people believe. Because you eliminate this kind of middle, that's maybe was a bottleneck before, I don't know, in some cases. And okay, that you commoditized, that disappeared. Mm-hmm. But the other bottlenecks about, like we said, verification, evaluation, and so forth, it's not going to change. It can become even more complex, right? And by the way, with the programming, it's not as simple. It's, of course, these tools are super impressive, but it's not a panacea, I can tell you. I've been, everyone who uses it. How many people use cloud or Codex for doing really kind of more complex, say, infrastructure software? Yeah, I mean,
wow. Nobody.
It's hard. Like, I mean, look, it's like Anthropic. Someone forwarded it to me. They hire software engineering, then pay them a lot, right? There's just something like base salary, $570K.
Yeah.
So why do they still hire them? Why do they use cloud, right? But because you see, the point is that, it's very hard, formally specified programs is damn hard. It's very hard. Actually, we kind of have, some kind of loose specification. And then verifying them is actually even before that. If you really build infrastructure software or something like that, most of the time you don't spend in writing the code. Most of the time you spend in debugging, improving, maintaining the code. This is where you spend the time even before that. So it's again, you see that, I'm just trying to say that you see these kind of things even in programming and software engineering, which is true, is much easier to verify and much quicker to verify than other artifacts. But even there, you see these challenges.
What I find so fascinating about this conversation is that these are two of the world's foremost scientists and innovators in this discipline of AI. And I think from here, I don't want to put words in your mouth, what I'm hearing is that I don't think you're saying that we're going to get AGI or ASI anytime soon.
Oh yeah.
Which is what we hear from.
But this is
if you're writing the S1 for Anthropic, you would say it's coming soon, right?
Sure. I mean, it's again, it's what is AGI and how much it matters, right? It's like, because it's like in time, and this is going for decades, there are tasks for which computers are better than humans, and the time goes on, more and more, and the computers will be better than humans at more and more tasks. There is no question about that, starting with the calculators, right? At the end of 60s, 70s, right?
Yeah. Can I pick up a little bit?
Please chime up.
I think from listening to the talks this morning, I was really struck about how people feel that they're so frenzied. And I think for Jan and me, if I can also say this, the future's taken a long time arriving. I think AI, I've been doing AI 30 years and suffered through these winters. And, at SRI, there were people doing A*, 40 years ago. I was at MIT last week, and they were talking about Norbert Wiener pushing cybernetics, and then John McCarthy, who was trying to make tenure at MIT, and he made up the term AI to distinguish himself from Norbert Wiener, and of course duly decamped to Stanford. But anyhow, I think there really is more of a continuum. I think you're feeling, so I'd like to, and to Jan's point, the future takes a long time to arrive. The initial prototypes are easy. But then to integrate them into the fabric of society, that's what takes time. There was a professor at Munich, actually German military academy called Bundeswehr, who was in Munich, but he had a Mercedes drive autonomously to Berlin from Munich. And that was in 1990. I think it is not yet integrated. So I think that it's undoubtedly a fantastically excited time. I wish I was 40 years younger, because I think the next 40 years are going to be just a wild trip. But I think I would not feel frenzied. I mean, just the last thing that Jan said, it's not easy to write specifications. It's not easy to ask for what you want. And somebody said you shouldn't go to universities, and maybe I'm a little conflicted. One of your wonderful founders said this, by the way. I think that, universities need to smell the coffee, so don't get me wrong. But I do think, and somebody else spoke about meta-learning, I do think that we still there's a big role to be spent in terms of asking for what you want, which are integrated into our value systems, not just in software. It is true that what I call embodied intelligence, here Jensen calls it physical AI, embodied. Intelligence embodied in the physical world is going to be big. But even in software, about agentic, multi-agentic systems negotiating with each other, I mean, those are all things which need to have built into them values that we hold dear. And that is going to take time. And that, I think, is sort of design. It's not, Jan talked about making things, and then do people care? And do they correctly mirror your value systems? He talked about Databricks. In the early days, I remember he used to say, we spend all our time doing what he called data proctoring, which is cleaning up the data before the algorithm. Whereas in the university, we spent all our time just teaching the algorithms, but they operated on junk, till you had to do the proctoring. So I do think that it's a pretty exciting time, but it's not so out of control. It doesn't feel out of control to me.
Yeah. It's not. So I think, look, the way I think about it's AI is still a tool. It's like a calculator, it's like computer and so forth, your car. There is one difference though. In general, the tools we are using is pretty clear what they do, what they don't do, what they are good at and what are not good. In the case of the AI, this kind of boundary is amorphous. It's not well defined. It's moving. So therefore, you are going to have all of this, very high expectation because you don't know what it's good for. It's like you generalize. People are, someone is this quote which I really like. It's, nothing is as good as you think, and nothing is as bad as you think, right? As a humans, we have emotions, and we try to magnify any kind of thing. But that's what I'm trying to say, because you just use any of these tools and go deep and deep, and you'll discover the limits. And clearly, the limits are going to be lower than you initially hoped. And I'm saying that as someone, we try very aggressively in our group to use these tools to improve our research, all of this kind of AI researcher and so forth. We started, 1 year ago. And I just force my students to use these tools for their research. And you can see, it's like, that's what I'm saying. The advantage when you put it this way, you kind of see the boundaries at least at some point. And then things are going to change. The boundaries are going to move. But I think that's one of the keys, right? It's like if you can figure out what is good for what is not good for, I think that's one of the keys to use these tools extremely effectively. And again, AGI it's a continuum. It's not well defined, which is good because everyone, people can claim, AGI was achieved or has not been achieved, right? Everyone is right.
Everybody's right. Shankar, I want to
Can I just say
please,
about this AGI? Go ahead. I think too much is made of this term AGI. On the other hand, if you sit and think about intelligence, some parts about machine intelligence are retrospective, learning from the past. Other parts of intelligence are about planning for the future. But then there's a third part about reacting to why the future isn't what you think it is. So I think intelligence, human intelligence, has within it all these tenses. I think when we say machine learning, generally speaking, you're talking about what you do from the past. But I certainly hope the future isn't going to be the past. So if we just assume that we're going to use machine learning, I think it's going to be a pretty boring future, and I don't think it is. So I do think that artificial, and to Jan's point, as human beings, we don't tell somebody, these are your specifications, and I'm going to check that you meet them. In fact, you expect humans to evolve. You expect their capabilities. That's what it means to have a team. A human bot team, a human software team has to be one where they co-evolve, and you build confidence in somebody. So those are all attributes. Those are essentially human attributes. And to lump them all, okay, you could call it artificial general intelligence, whatever you want to call it is fine. But exactly what that is probably a more nebulous goal. And it isn't, and it does run, and to Jan's point, it does run counter to what we teach in engineering, where you say, here are the set of specifications, build something to that, and we'll certify it, and you'll do it. That's, I think, the premise of AI is to go beyond that. And that's exciting to me.
We're going to take questions for this panel, so get ready, guys, because I know you have a lot of questions. I want to come back to open source and then the role of research in the university environment. I know you both want to talk about this, but before we do that, Shankar, my words, I think Jan just bursted the bubble for AGI. So can you do the same for humanoid robots? Where are we in the humanoid robot space?
I think, look, I don't want to burst any bubbles because this is really
the secondary guys have left the room. It's okay, you can do it.
I do think, though, I think it's common in technology to have a cycle of hype, without the hype. And we used to say, yesterday's Hollywood is today's headlines and tomorrow's technology. So, I think that it's true. I've got tons of, there's more humanoids than grad students in my lab nowadays, but, there's no danger of and it's true, they're out of cages and they're working with people and so on and so forth. And the premise of having, I've got a 94-year-old mother, and I believe me, she'd much rather have a humanoid help her than a nurse, I think. So I do think the premise is huge. It's going to take a while getting there. So I'm not going to burst any bubbles about humanoids. I think by the time somebody makes money off them, 163 startups in China are going to have to be pruned, I think.
Speaking of China, there were 100 robots that ran a marathon, half a marathon, last week in Beijing, and most of them beat the humans who also ran the half marathon at the same time. And they did it under 15 minutes, half marathon. So, by the way, two humans have done a full marathon. Under
just about sort of a local Berkeley story. So he set us up, it's the 45th anniversary of US-China ping pong. And so we set ourselves the goal of, and President Trump was supposed to have gone today.
He's going soon,
but he's going soon to China. And so we'd worked with them to have, a table tennis playing robot, a ping pong playing robot. And amazing, you can actually build these robots, and actually even Sony has now jumped into all of this. So I think things are moving along fast. And, I think this go-to moment when these robots get ahead of humans, I think in a lot of sports is almost there.
And that robot's in Shankar's lab on the Berkeley campus, and there is a YouTube video, and it's the longest rally. I don't know how many shots, like over 100 shots. So we're almost there. Let's come back to open source. For both of you, Jan, what role do you think open source will play in AI? Already some LLMs have come out, but you started one of the pioneering open source labs at Berkeley. What do you think? And will it have impact on the current generation of proprietary LLMs?
I hope so. It should definitely have. Of course, Berkeley was a cradle of the open source for a long time with Unix, FreeBSD, Ingress, the first relational database, open source relational database. And we build a lot of open source, and a lot of has been successful. For me, the open source, it's about it's a diffusion of innovation, right? It's like of knowledge, right? And I think that it's extremely important, right? It's like if something is not in the public domain of the knowledge, almost it doesn't exist, right? So, and I just want to make sure. And then, please, and then I'll come back about that, because the situation right now is very bad.
I'm going to pick up. I think, look, in a university, there's two very important reasons to do open source. One is our job to diffuse it so that industry can benefit from it, and we're better off doing this. And I think it creates an atmosphere in universities that there is no hesitation to collaborate. But the second thing is, I think our mission should be to be pre-competitive. And pre-competitive means that you actually, pre-competitive doesn't mean industry unfriendly or startup unfriendly. It has to be something that's verifiable. See, I think that one of the joys of having open source is that algorithms and publishable is that people can verify, and a claim on archive is supported by something that you can, has perhaps on GitHub or someplace else, a repository of code to verify. So that, I think, for us, and I think as Jan said, the long tradition, it's a little bit, I would say, a little bit of a West Coast tradition to our friends at Stanford. Okay, so.
Yeah. But it's again, I think that right now the situation is very bad, right? If you are talking about this model, you have the proprietary models, and it's bad as in multiple dimensions. But before, you have to compare with what happened in the past, and you don't need to talk about this kind of maybe different open source project, maybe different data points in this kind of space. But think about the internet. The internet was developed, and it was a strong collaboration between academia, industry, and the government, right? Started as a DARPA project. Actually, that was so inspirational when I came here in the US. But things today are very, very different. If you think about all this kind of triumvirate, is broken with these models. There are proprietary models. Each lab is doing its own model. They are pretty similar. So the use of the human capital is extremely inefficient because everyone is going to do more or less the same thing. There are some techniques which are a few months ahead and so forth, and for these techniques, people are paid handsomely. Actually, the engineers now, don't have as much incentive to disseminate that knowledge because that's millions of dollars or tens of millions or hundreds of millions worth. And that, so that's one. The academia, because the resources and how much it takes to train these models, they are out of the loop. Because a big compensation of these labs, they are going to pay all this kind of faculty and the students more than ever before. So in some sense, both at the society level and at academic level, things are pretty bad. And, you can see that. How many of you use open source models in your companies and so forth? Right? How many of these models are non-Chinese? Right? Everyone today is using Chinese models, the open source models. They are the best, right? We have this other LM Arena and so forth. The top 10 or whatever are all from China. So, you have to ask yourself, there are a lot of logical conclusions from here. You can, that's easy to infer. But, things are not good.
Jan, what is the call to action that you have for all of us here? A lot of people here pay taxes in California, federal taxes. The government, as you said, you brought up DARPA. It's government-funded research. There was a great, healthy collaboration between academia and our federal and state governments. What seems to have changed? What's the call to action for all of us?
I mean, obviously, it's about funding. Funding the infrastructure and funding the university and the excellence in the universities, right? I mean, it's what it is, and this has changed. And I have a long, it's like in a sense, the research in the U.S. and the funding in the research in the U.S. has been on declining for many, many years since I am here. Okay, since 20, 30 years ago, probably, when I arrived here. So, but this is what I want. It's like what you can do, right? I mean, it's like, these are expensive, right? It's like, I think you need to have open source models. There is no question about that. They are going to be more secure, more auditable. You can sign the weights if you don't want to be anyone to modify them. So you can verify the signature. And it helps, if you think about that, it's like a society. If everyone believes AI is so important, right? It's going to change everything, right? So what do? It's like you want everyone, kind of people responsible, your talent, to work on this problem, solve challenges. And the best way to use, the most effective way to use the talent, which is probably one of the most precious resources, is to have them collaborate, right? And that doesn't happen today, right? So it's very suboptimal. And you cannot, in order to collaborate, you need people to collaborate. You need kind of open artifacts, which can be open source. You can have open infrastructure. Otherwise,
Shankar, I want to pick up on something you said earlier.
Can I also reply
Please,
to his
yeah.
question? So in terms of, I think that the Silicon Valley ecosystem has served us well. But I think looking forward, we could take inspiration from an Asian model of thinking about industrial parks. You need to have people who create seed corn. That's what we view ourselves as, surrounded by entrepreneurs and companies, and to share this ecosystem in a way. And this, I think, too often we say the Shenzhen model or the Hsinchu model or industrial parks in other parts of the world too. But I do think having this kind of industrial park-like model, look at this space. This could be the Presidio right here could very well be the kind of spaces. Berkeley has acquired some land in Mountain View. And so I think that for the kind of AI-powered, AI in everything, I think that, this is not saying about manufacturing, that whatever elements are needed, it's not just manufacturing, but whatever elements are needed to be able to integrate them, I think it would really enhance, and there are multiple in the country, I'm just talking about California, but I do think if we can all unite adequately, and of course, someone's got to fund the seed corn, and I do think the federal government, the taxpayer money really is ought to be the most patient capital. And that's as it should be. I don't think we should force a capitalist system to be more patient, because we need somebody to generate the seed corn. So anyhow, so that would be, I think, the call to arms for us as a nation.
you don't even need to go to that. You can go back to the history. You have internet example, you have NASA, right, going to the moon and so forth. These are great examples. But obviously, it takes a lot of will and political will. It's hard. And again, it's like, philanthropy maybe can do much more, but yeah. But what I'm saying that the current trend is not great.
Shankar, let me ask you a question, and Jan, please add to it. Shankar, UC Berkeley is, I think, 158 years old. You had brought this up a few months ago when we spoke about this topic. You said, if we were to launch Berkeley today, what would that look like? And what would you teach?
I think higher education, like a lot of other institutions of society, is at a point of inflection. I think how we teach and what we teach in an era of AI has to change. I mean, I think it's too much of a Band-Aid for all of us as professors to tell our students, don't use ChatGPT. Why not? Why shouldn't they use it? Maybe we got to change how we evaluate. It's certainly not the grades that we are churning out or all the A's that Yale gives, sorry, just kidding, this inside joke, is not really helping credentialed students who then go out and do startups. So I think how we teach, how we credential, I think has to change, and what we teach has to change, because what you can get on Gemini or Cloud or OpenAI is great. Why not embrace it? But that as a result, and also, I think these, I don't know how many of you know these terms, dean, I was a dean, provost, chancellor. These are all terms passed on by the Church of Rome to the University of Bologna for canon law in 1335. So, if you can't change 600, 700 years later, I don't fully understand why we have all these colleges. And so I think we've got to change. I think the malaise in higher education is different from what is being portrayed in Washington. I'm sorry, I'm just a Berkeley professor here, but we do have to change what we teach. And you know what, students, the word entrepreneurship is really a surrogate to me for problem solving. You become an entrepreneur and there's a burning problem that you want to solve and you find the resources to solve it. So I think that's what we need to teach our students. And meta-learning, that's what meta-learning is, learning to solve problems and trying to understand what the problems are and make them bite-sized enough and so on. So I do think, I hope we're going to really sit back and really rethink how we teach and what we teach.
I'll give you that.
I agree with that. I think I'll provide maybe a different angle here. So there are things about humans you cannot fundamentally change, right? Period. So, and a few of them, one of them I want to say is that I was reflecting, we are not as smart as we think we are, clearly. So here is an example. It's like, if you think about, we are not very strong deductive or inductive. Like for instance, Newton's laws, right? How many years it took to develop those? But humans have access to the observations for hundreds of years to do it. It took such a long time. Here is another example. I was at this kind of math Olympiads, physics Olympiads. What do these, which is, supposed to be the best people in cream, how do they prepare? Or chess, for that matter. You do a lot of problems because there are 4 different kinds of problems and you need to master them. But you know what? If you are so smart, it shouldn't be needed it. Like chess, you need to know only the rules. You should be able to, everything, to deduce. That's what I'm just saying these things because I want to provide the context. Now, the other things that humans are not is like humans learn by doing it, at least most of them. If you don't do it, you don't learn it. So you need, first of all, what do you need to learn? What do you need to teach people? Because, say, programming. I can tell you, and I think that you cannot stop. I never been that you should artificially put artificial barriers, right? So they should use. But they have to understand that just generating the code with cloud, looking at the code, and then asking questions, they didn't understand. They didn't learn, right? And there are more and more evidence to that, right? I taught CS162 is Mate last semester. The exams scores, the worst in memories. In terms of projects, homeworks, the best, right? So that's what it is, right? And you need to choose first, and I don't know, that's what to teach. And what to teach, you cannot do it the easy way. There is no easy way as far as I know. And you may do something like, like calculators, are like we discussed from 60s, 70s. We still teach people how to do arithmetics. Addition, multiplication tables, we teach them, right? Maybe there is something like that for what, if we believe that programming is important as a skill, you have to teach them, but you are going, when they teach, they cannot use these tools because they are not going to learn. Of course, when they do something they can use. That's kind of where I'm coming from. You think always that the humans, we are in kind of limited and we cannot change, right? As much as we want to think we can change. So therefore, you always have to go, because that's education. It's about how to navigate against the human limitations and make them absorb the information you believe that it's important and they are going to help in their life. carry on.
Yeah, and you know, again, we must have had a secret society to be on the same page here. But I mean, I think it's you know, for education also, this thing that Jan just said. You know, there's a continuum. You know, the Greek philosopher Anaxagoras, 500 BC. Who said that the mind exists to control the body. The robotics guys call him the patron saint of robotics. At the same time, you're talking about value alignment of agentic AI. You know, it traces its history back to Queen Dido of Carthage and the legends of the foundation of Carthage. So why don't we provide these? And Newton's laws was his Principia, 1635. You had 2,000 years of experimental observations. Okay, it's no more than large language models. You know, it had all kinds of other practical experiments beyond VLAs and LLMs and so on. So I do think what we teach and how we teach it really, you know, the burden's on us. I agree. And this class that he talked about, is sorry, since he's not saying it, I'll plug it. You know, all the management of Databricks teaches this class on building distributed systems. And that's the class he's alluding to, Mate.
Yeah, but it's not very natural. That's again, it's like, it's not that people cheat. They don't. They do believe, and I talk with them, they genuinely believe that, you know, they generate the code, they read the code, and they understand the code. Hey, I do it. But if you ask to do something slightly different, they are not going to do it, right? Or most of them. So that's kind of the thing. That's what I'm trying to say. Like, and coming, you know, the digital world will change. The human, very hard to change. Of course, you can have digital implants and so forth. Maybe that's another, you know, another angle. But that's kind of what I find more and more, right? It's like, you know, it's like you need to decide what to teach. And don't forget that humans, at least, you know, most of them, they learn by doing things.
We have to wrap things up because people are hungry. I want to just make one observation because, so UC Berkeley is the #1 public university in the world. And you can see why. I think we have two titans of academia, learning, entrepreneurs. Both are entrepreneurs. They serve in both public and private worlds. And what's so awesome about this is that you guys have this infectious curiosity of learning still. You're both curious, and you have just this like childlike enthusiasm for what you do, and that's really amazing. So thank you for coming, for sharing your enthusiasm
and I'm sorry
and provocation.
To interact with
no,
the
and I
audience.
promised them questions. We're going to break my promise because I think because you guys are hungry. Let's go ahead and grab lunch. To the extent that our guests are willing to stick around and take questions and mingle, please feel free to do so. And please eat as well. So let's break here. Liz is going to come here and like just speak for 30 seconds, wrap things up. We're all going to grab lunch in the next room, and then we can come back, and everybody will be here, and we can continue the conversation. But thank you, Liz. Thank you so much. Thank you.